some of those insurance-related knowledge with the real sector, like enforcing building codes, installing risk-resilient infrastructure in place. And once we do that, the price or the cost of insurance premium will come down. But there would be certain populations which cannot afford insurance, and that's where the government has to step in by subsidizing some of the premium or trying to relocate some of those populations away from those centers.
Arup Chatterjee, really good to have you with us with a very interesting theme and angle to look at climate risk and insurance. Principal Financial Sector Specialist at the Asian Development Bank, joining us from Manila. Watch us live and see our past conversations on our interactive TV function, TV Go. You can also dive into any of the securities or Bloomberg functions that we talk about. Also become part of the conversation. Do send us those instant messages during our shows. This is for Bloomberg subscribers only. Check it out at TV Go. This is Bloomberg.
We're making good progress on the discussions. We're engaging constructively. We're listening and trying to really understand the areas of concern that our workers have. And I think the meetings are going well. So we will just continue to engage in a constructive and respectful manner.
Woodside Energy CEO Meg O'Neill speaking to us about labor disputes in Australia that could disrupt natural gas supplies from early next month. Bloomberg's Sue Keenan joins us with more on this. And Sue, outages in Norway also adding to the volatility in nat gas prices.
Yeah, that makes for a 1-2 punch for natural gas prices, which have already been on a tear for a number of reasons, including concerns about availability. Now you've got a potential strike and heavy maintenance in Norway resulting in outages, and that's added to market nervousness. At one point, European natural gas was up 9.9% before pairing those gains. Now, the workers at the LNG liquefied natural gas plant of Woodside Energy Group have threatened to strike as early as September 2nd. That's unless they reach an agreement during scheduled talks, which are continuing Wednesday, and that's when we're expected to get more clarity. Now, staff at some Chevron Corp facilities are also considering walkouts. So what's the market most nervous about? Well, the size of the potential impact. A strike risks interrupting as much as 10% of global LNG supplies, and you see that reflected in the increase in price. Asia and Europe are preparing for the winter heating season, and those are two regions that buy for a limited amount of the fuel worldwide. Again, everyone waiting for clarity. Paul?
Yeah, so a few factors on both the demand and supply side as well. Chinese demand, a few question marks there, but a possible supply boost from Iran. How is this impacting prices?
Yeah, when we look at oil, that definitely is sort of a game changer for the supply-demand equation. Right now, we're seeing oil prices flat in Asia trading, but oil did post a slight decline in the U.S. session, and this is coming again amid lingering concern about demand from China, the world's biggest crude importer, and signs that supplies are rebounding. Now, West Texas Intermediate futures for October were holding right around or just below the $80 level in New York trading as thin volumes have left the market struggling for direction. Meanwhile, observed imports from Iran have surged by about 2.2 million barrels a day this month, and Turkey and Iraq, I should say, have held a sudden flurry of talks. Both are seeking to restart a major oil pipeline. Now, the rally in crude futures for both West Texas Intermediate and Brent took off in late June. That has faltered in recent weeks, and you can blame that in part by efforts by OPEC linchpins, Saudi Arabia and Russia to curb production. They've tightened the market. Now it's really a question of direction at this point.
All right, Bloomberg's Sue Keenan there. Well, investors who bought Australian lithium stocks at the start of the year could have doubled their money or maybe lost more than half of it. Data compiled by Bloomberg shows the sector's shares offer some of the most volatile returns on the ASX 200 index. And for more on this, let's bring in metals and mining reporter James Ferniho. So, James, a bit of a freewheeling stage of the lithium boom at the moment. What are the factors that are driving this?
Well, the key driving factor is the clean energy transition and the sudden explosion of interest from car makers in going electric, and for that they need lithium. It's a very, it was previously a really niche market. It's now becoming something quite different, and so you've just got all of these very small, often miners, going out looking for lithium deposits. They'll find one. They'll get some drill results. They'll publish them on the stock market, and investors will often just pile in, push up the share price, often potentially not quite understanding the true value of the result. So that kind of explains why in some cases it's a fantastic resource, in some cases it's not so great.
So what should we be looking out for, James, when it comes to separating the losers and the winners in Australia's lithium race?
Well, investors who know what they're talking about tell me it's all about, it gets quite technical, but basically you want a really fantastic big deposit of spodumene, which is lithium ore. And it needs to be close to the surface. It needs to be if it's in an accessible part of the world, Australia is a great place because it's a very stable jurisdiction. Other places might be a bit less stable. So they're the kind of things, basically it's one thing to have a good deposit. It's quite another thing to get it out of the ground and get it to market. So that's kind of the key. But it gets beyond that, it gets quite technical.
James, lithium right now dominated by small and mid-sized players. You'd think that this sector's really set up for consolidation. What are you watching in terms of M&A?
Well, this is really interesting about lithium because it really is one of the hottest commodities on the planet. You look at its growth trajectory, it's going to just go up and up and up as car makers increasingly go electric and phase out their gasoline-powered cars. But strangely, the really big miners so far have pretty much stayed out of it. The only one of the massive ones that seems to want to get into it is Rio Tinto. So the M&A activity is often sort of smaller ones merging with each other to become larger. We can certainly expect a lot more activity, but the really big question, and I think if you're holding lithium stock, this is the thing you'll be really interested in, is are we going to get the really big players coming in, because they're the ones that can pay big money. So it's going to move very fast. And the other thing also is car makers are also getting involved. There's been a lot of talk about, is Tesla going to become a miner? So that's another one to look out for.
James, super quickly, I cover emerging markets, especially LATAM, and I come from Bolivia. So I've been watching the lithium triangle of Bolivia, Chile, and Argentina as well. It's not all about Australia, right?
Yeah, absolutely not. So it's a different kind of lithium, a different sort of way of getting lithium in that part. It's brine, it's kind of contained in water underground, whereas in Australia it's in the rock. But that's certainly, Argentina, Chile already is the second biggest producer of lithium. Argentina has a lot of projects. So Argentina big over the next few years. Canada also is becoming a really major player, and some really promising deposits are there. And Africa as well. I mean, it's everywhere is looking for lithium at the moment.
All right, metals and mining reporter James Fernio there on the lithium space. Here's some of the stocks to watch when trade opens in Korea, Japan and Australia in just a few minutes' time. As Sue mentioned earlier, we're continuing to track the impact of potential industrial action in Australia's LNG sector. Talks continue on Wednesday to avert a possible strike at Woodside's Northwest Shelf export plant. Elsewhere in the energy space, Santos has reported first half underlying profit, which fell 37% on year. And grocery giant Woolworths reporting net income for the full year. That also missed average analyst estimate. Sherry.
Right, Paul. Japanese seafood companies, including Maruha Nichiro, may fall as Hong Kong imposes import curbs over this week's release of treated wastewater from Fukushima. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
On the next episode of The Circuit.
It's still almost shocking how new you still are to this sort of being famous thing.
When I do, go out and people are like crying, that's when sometimes I'm, whoa, why? There's no rule book for it.
Watch The Circuit with Emily Chang, Thursdays, 10 p.m. Eastern on Bloomberg Television, or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Daybreak Asia. We're counting down to Asia's major market opens after declines on Wall Street. Treasury action pretty subdued. Of course, we are still waiting for Nvidia's results for more catalysts in the tech sector, not to mention that we also have Jackson Hole later in the week.
And some more earnings news to digest here in Australia. We did hear from the retailer Woolworths, also natural gas producer Santos, and of course that threat of strike action still casting a long shadow over the natural gas sector here in Australia. Belle.
Yeah, that's right, Paul. Certainly earnings still a focus in Australia. We've got China banks as well kicking off later today in China, so earnings focus still in Asia. But ahead of the open today, really what's going to set the stage for us are those numbers out of the US, particularly the likes of Macy's as well, one of those in focus. But the open's now for Japan, Korea and Australia. And as I said, yes, Macy's one of those that was in focus in the session on Wall Street. Credit card delinquency starting to accelerate there, so just really starting to paint a picture of the worsening outlook for the US economy because a lot of those savings piles now becoming depleted. Treasuries, a little change in the price session. We've still got yields around the highest in 16 years on the benchmark, so investors really positioning for the Fed to keep borrowing costs elevated. So coming into the session today, a little surprise really, we're seeing the Nikkei 225 coming online to the downside and the Japanese yen there still holding above that 145 level. As you mentioned, Sherry, the other key focus of course is NVIDIA. We saw that stock weakening in the prior session, but putting it in context, of course, a more than 220% rally over the course of this year, up 8% to start the week as well. Certainly a big focus on that because the chip makers' earnings, given its heavy weighting as well on the S&P 500, seen by many as setting the tone for markets alongside Jay Powell's speech on Friday. Changing on, and in Korea today, again, we will be really watching some of those supplies into NVIDIA. SK Hynix is one of them, and that stock there looking a little bit weaker as we get underway. The cost be there off 0.3%. What else we're going to be watching, of course, so it is that countdown that we have in Korea to the Bank of Korea decision that is due on Thursday. No changes expected to the key rate here, likely to be kept restrictive in the battle against inflation, though we do have those rising risks to the economic outlook, debt stress, export slump, just some of them. We are continuing to see that currency there weakening past the 1340 level. Let's change on because in Australia today we do have earnings. Yes, a focus will mark Woolworths when we get that stock online in a few minutes from now. But broadly, again, it is still that picture of a contraction or a deteriorating outlook we're continuing to see. It came through in the private PMI reading this morning. So we saw the services one, or composite rather, falling below the 50 mark to 47.1. And then also the flash services PMI, you can see that bigger deterioration there to 46.7. In terms of what else we're watching, it is really that impact of the Chinese slowdown given that trading relationship between Australia and China, and that is likewise showing up in oil prices. We've got Brent crude there in the red, Sherry, to start the day.
Right, Belle, take a look at how U.S. futures are trading at the moment. We're seeing fluctuations between gains and losses early in the Asian session after we had stocks falling in New York. Of course, Belle mentioned that we are going to get NVIDIA's results, and just on the eve of that report, we got NVIDIA falling almost 3%. Really a test over market excitement for artificial intelligence, but at the same time, we had financials leading the declines in the New York session with the KBW Bank Index falling to the lowest level since June. S&P Global cutting some U.S. lenders, citing a tough climate. Remember, 2 weeks ago, Moody's carried out a similar action. We're also watching consumer health and perhaps a little bit of concerning news. Macy's sinking in the double digits, credit card delinquencies accelerating here in the U.S. Well, we spoke to the CEO of Kayne Anderson Real Estate Advisors. He says markets are in for a rough road ahead. Al Rabil told us exclusively that he believes that the U.S. economy will experience a hard landing and that the Fed has already gone too far.
I'm still in the hard landing camp. I know we sort of have consensus around soft landing at this point, but I think the reality is that we've already landed. Core inflation is down to 3% plus. Core inflation minus shelter is down to 1%. So the reality, in my view, is that we've already landed, and that the Fed will do what it has historically done, which is wait too late to get started and then go too far. And I believe that they've already gone too far. Now we'll see what Mr. Powell says on Friday. We'll see what happens in September. But we've got $17 million of household debt. We've got trillion.
That's a lot.
17 trillion of household debt, 12 trillion of mortgage debt, 1.6 trillion of auto debt, $1 trillion plus of student debt, which, as we know, is going to have to start actually paying on that debt sometime soon. So we're a consumer-driven economy. I think we're in for a rough road ahead.
Speaking of the rough road ahead, you look at the 2-year, over at 504 nearly today, and you look at a 433 handle on the 10-year, and you think about the trajectory of rates and what else has to break as rates stay this elevated. Where has the market not yet seen pain that you expect?
Well, you were talking about the regional banking downgrade. I mean, we're very close to that. We've got a big real estate debt business and a big real estate equity business. On the debt side, we've got $1.5 trillion of maturities coming in the next 18 months. Obviously, that's going to be difficult to do in an illiquid environment. Regional banks are a big provider of capital, or historically have been. Now private credit is coming in, private equity is coming in and filling some of that gap. But the reality is there is a lot of mortgage debt that has to be refinanced, and those rates are a lot higher. And I can tell you that a lot of those Excel spreadsheets just don't work.
Well, what about the default rates here? Because you have seen a few defaults start to hit the market, but nothing so crazy yet. Do you expect that there's going to be significant distress? And frankly, you've made your name in some of this real estate distress. At what point do you find assets that are cheap enough to buy?
Well, it's true. I say I've lived through 88, 98, 08, and the pandemic, and so I've been through a number of different crises. I don't see capitulation yet. It is a lagging indicator. I mean, the issue is that you've got a 12-month lag on shelter really being factored into the inflationary dynamics. So, I think we're going to see capitulation and prices that are interesting, and private credit and real estate credit get very interesting from a buyer perspective later this year and into the first half of next year.
Kane Anderson, Real Estate Advisors CEO and Managing Partner, Albert Rabeel. All right, we've been running for a few minutes now here in the Asia Pacific, on Tokyo, Sydney and Seoul at least. Annabelle, what's moving at the moment?
Well, I think it's probably a question, Paul, of what's not moving instead, because trading volumes are lower for a third straight session today. If you take a look at this terminal chart here, so this is the turnover or average value at time function. Essentially what it tells us is where trading volumes are at, and this dotted line here, the light blue one, shows the projection over the course of the day versus what we see, that darker blue line at the top, which is the average for the 20-day moving average rather. Right now in the session as we get underway, we're about 35% lower for trading volumes where we would be typically over the past few weeks or so. It really just points to how much uncertainty there is in the market at this point, given those two big events later this week. We've got NVIDIA earnings that are due out after the bell today in the US, and then also you can add to that Jay Powell, who's going to be speaking later this week on Friday, and really giving us an indication as to where rates go from here. So investors very much sitting on the sidelines ahead of those two things. Let's change on though and take a look at what is moving so far. Really one of the key focus for us today is going to be Japanese seafood companies. Maruhu Nichiro, this one at the top, is one that gets about 5% of its revenue from outside Japan. And so essentially why we are focusing in on these ones is because Hong Kong has just imposed import restrictions on seafood to seaweed from parts of the nation, and that's really in response to Japan's plan to start releasing treated wastewater from the Fukushima nuclear plant that could start on August 24. Hong Kong is the second largest importer of Japanese seafood after mainland China, so that's quite significant, that curb that's come through. Let's change on, because what else we've seen moving ahead of this release of Fukushima treated wastewater are salt stocks. Yesterday we saw a lot of these in Seoul hitting their daily limit. Today we are only seeing one climbing there, but still putting it in context, some of these were up around 30% over the past session or so. It does really appear though that it's more of that perhaps retail participation, because we had seen again those huge surges in the likes of superconductor stocks just a couple of weeks ago. So perhaps that shift to a new segment of the market. Let's change on. Last sector that we're focusing in on today is the Asian suppliers to Nike, because we've just seen Nike holding a record streak of losses. It is really those concerns that are continuing to build around the health of China's economy and that consumer recovery. We're still not really seeing that taking shape just yet. And so we saw Nike down more than 1% on Tuesday, 9th straight session of losing streak there. So we're seeing a little bit of a mixed reaction so far in some of the Asian suppliers to Nike, also its peers in the retail market, Sherry.
Right, Bella, and still ahead, we'll discuss China with Cornell University's Ishwar Prasad, hear why he thinks many of Beijing's problems are a consequence of its own policies. But first, we have more on that story. Hong Kong planning to curb seafood imports from Japan over the release of treated nuclear wastewater. Details next. This is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
City, from London, in Sydney, from Washington, in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
Week, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Coverage starts Wednesday, August 23rd with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
Country Garden is leaving investors in the dark about the exact date that a key grace period ends after missing interest payments on dollar bonds earlier this month. For more, let's bring in China credit editor Kevin Kingsbury. So, Kevin, why all the uncertainty about this payment date?
Well, it boils down to, Paul, because the bond documents themselves aren't terribly specific on when the grace period ends for the $2 bonds that currently Country Garden earlier this month did not pay interest on. August 7th was the effective date for when these payments were originally due. The actual due date was August 6th. So 30 days from those is either September 5th or September 6th. Now, because the bond documents aren't specific as to when exactly the grace period begins, whether it's the actual due date or the effective due date, there's some uncertainty in the market as to when exactly this 30-day period runs out. Even Moody's Investor Service, they told Bloomberg this week that they themselves aren't entirely sure as to which day would potential default happen if payment throughout the 30 days still does not happen.
Yeah, so calling a default becomes really fuzzy. Does that mean that we could see more legal issues around that?
Sure, certainly if they do decide to pay at the very end of the 30 days, we could see some bondholders perhaps try and push some sort of default action. But because of the straits that the company is in, chances are the bondholders will kind of lay off, especially since we have this 3.9 billion yuan bond that's also coming due that same week. Of course, bondholders are over the next several days are going to be voting on a proposal from Country Garden to extend this bond by 3 years. There's also an alternative proposal to demand repayment now. So we have this meeting this week, so that should give us some clarity as to how likely or not Country Garden will actually pay the dollar bond interest in a few weeks. Because if they default on the yuan bond, there's really no chance that the dollar bond coupons would then be paid.
All right, Bloomberg's Kevin Kingsbury there. Let's take a quick look at how we're trading in the Asia Pacific at the moment. Not a lot of action in short. Here in Australia, pretty flat on the ASX. The Nikkei also fairly flat. And not a lot of volume either. So markets really struggling for conviction in the Asia Pacific right now. Let's bring in Kelvin Taynor. He's Regional CIO at UBS Global Wealth Management. Kelvin, as I mentioned, their equities markets at least, really struggling for conviction. I know that you prefer the bond space right now, and we have seen the yield on the 10-year, for example, reaching levels that we've not seen for a decade or so. How much higher do you see yields moving from here?
Well, I think it really depends on what Fed Chair Powell's speech on Friday will likely be. I think he is likely to actually start pushing back on the market's consensus call of a first rate cut in March next year. And I think if that's the case, then obviously, where the bond yields are concerned, they're likely to actually stabilize at this level, or perhaps even trend it a little bit higher. But we do think that we've actually seen the last rate hike where this cycle is concerned. So we're actually quite confident that, barring any unforeseen circumstances or any change in inflation data over the next 6 months, that the yields will likely stabilize at this level and perhaps even actually move back to the 4% level.
So if you think we've seen the last rate hike, what sort of rhetoric do you expect to hear coming out of Jackson Hole? Because Chair Jay Powell has wrong-footed markets before with his speech to that forum. And beyond that, what do you expect to see in the next set of dots?
Well, I think what has basically set a little bit of a panic on the markets, because in the recent weeks, macroeconomic data in the U.S. has actually been trending upwards and actually been seen as more upward-looking, as more bullish than before. And, it really depends on the consumption figures that's likely to come out in the next couple of months and the inflation data. The Fed itself has basically said that they're likely to be very data-dependent, and that will in turn be an indicator of where the hikes or the cycle will likely be. But from our perspective, we do think that a lot of the data will probably peter out over the next couple of months, largely because of the fact that, where excess savings are concerned, the U.S. consumer is now starting to actually draw down its excess savings, and that by the end of this year will likely actually flatten out. And in fact, on a monthly basis, there's already the savings actually coming through. So the spending can't go on forever in that sense. And at some point, the 5% to 5.25% rates are likely to actually start impacting the global, the U.S. economy on a more gradual basis.
Kelvin, is that why you're seeing more potential upside for emerging market equities than U.S. equities, as you say in your note? And would that include China? I mean, we've just been discussing how many issues that economy faces.
Yeah, I think those are separate issues, but also, at the same time, you cannot just delink both issues. But I think more importantly, the dollar has to actually weaken. We've seen the dollar become increasingly resilient in the last 2 months. And, the dollar at these levels basically means that it's going to be very hard for the emerging markets to actually perform. So that's one condition that must be in place. The second condition is that the Chinese property market must recover, or at least show some signs of stabilization. And that, in turn, is unlikely to come in unless you get more widespread stimulus coming through from the Chinese government. What they've done thus far is very reactive, very piecemeal, and that's not likely to move a needle where the property market is concerned. So, property market really needs to stabilize and recover before the emerging markets as a space can actually outperform.
Kelvin, we saw Baidu, for example, receiving support and rising on their revenue beat and optimism over their AI product. We do have NVIDIA coming up as well. How convinced are you on the AI narrative right now?
Well, we've always been very positive on the AI narrative. We do think that is quite a major game changer where if you want to talk about the rhetoric, where the fourth industrial revolution is concerned, and we're in the very, very early stages, the infancy stage of that particular revolution. There's more room to go, but of course, it always boils down to valuations, and sometimes valuations do get carried away by the narrative itself. I think the fundamentals are strong, but if we go back to the valuations, they're a little bit over the top at this point in time.
Kelvin, I just want to get your views on the US dollar as well. It's been enduringly strong up to this point. You think, though, weakness might be on the way. Is that connected to your view on the Fed's next move?
Yeah, and that's also connected to the moves of the other central banks as well. I think what has really spooked the euro investors is that in the last couple of months, in the last couple of weeks, the data coming out from the Eurozone has actually been weaker than expected. I think if you look at the last time PMIs actually came out, it was very negative for all of the Eurozone countries. And that in turn basically means that where the ECB is concerned, they're likely to be a little bit more constrained with regards to their rate hikes. They can't go as much as they want, despite the fact that inflation or core inflation remains very resilient and strong in the EU. And that basically means that where the yield gap is concerned between the dollar and the euro bonds, that is likely to actually keep a handle as to how strong or how high the euro can actually appreciate. So I think the yield is actually really, really important. And I think the second reason also is because the Bank of Japan, despite them moving up the yield curve control to 1%, we haven't seen the Japanese government bond yields on a 10-year basis actually move beyond 0.6 to 0.7%. And that in turn is also likely keeping the lid on the appreciation of the Japanese yen. So if you combine those two together with the Chinese yuan, you can actually understand why the dollar has actually been so resilient recently, because the dollar index has actually still has not actually weakened to the kind of expectations that the market was actually looking at. And on top of that, just before the FOMC meeting in July, the market was very long the euro and short on the dollar. And I think at this point in time, there's still a bit of a flushing of those positions. But again, it all boils down to what Fed Chair will say on Friday. And that, I think, will actually likely dictate the direction of the euro dollar over the next 2 to 3 weeks.
Kelvin Tai, Regional CIO at UBS Global Wealth Management. Thank you. And of course, you can get a roundup of all of the stories you need to know to get your day going in today's edition of Daybreak. Bloomberg subscribers, go to Day Go, also available on mobile in the Bloomberg Anywhere app. You can customize your settings. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1, so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
We're watching Japanese seafood shares as Wednesday morning trading gets underway. This with Hong Kong now set to impose a range of import curbs. This is in response to moves by Japan to start releasing treated wastewater from the Fukushima nuclear plant into the Pacific Ocean. We're seeing downside of as much as 0.5% for those stocks. Let's discuss this with economy and government reporter Carrie Sue Lindbergh. Carrie, so we know that Hong Kong was the second largest importer of Japanese seafood last year. What exactly are they doing now?
That's right. So as soon as the news was announced several hours later, Hong Kong's chief executive John Lee immediately instructed officials to take action to prevent the seafood from coming into Hong Kong, and they'll be implementing the ban that they mentioned they would several weeks earlier. And so what this means is that moving forward, seafood, all live, frozen, chilled, dried, among other aquatic products, will no longer be allowed to enter Hong Kong from those specific 10 prefectures that have been outlined before.
So what's the fallout going to be for Hong Kong once the city's ban is in place?
That's right. So this move actually threatens a whole swath of products that contributes to an industry worth hundreds of millions of dollars. And we're already seeing the fallout for the past couple of months, when fears have arisen within consumers that maybe these products are already damaged. So restaurants have already seen as much as a 30% decrease on their revenue for Japanese restaurants in Hong Kong. And this is expected that if this pattern holds to the end of the year, they could be facing as much as $10 billion Hong Kong dollar losses, which is quite significant given the fact that they're finally starting to recover from the past 3 years' economic recovery.
Economy and government reporter Carrie Soon Lindbergh there joining us from Hong Kong. And here's a quick check on some of the corporate stories that we're following. Baidu's quarterly revenue rose the most in more than a year, with a larger than projected 15% jump. It's one of the big Chinese internet companies riding a bounce back in advertising following the depths of the COVID-0 era. Investors are now focusing on Baidu's AI ambitions as it awaits Beijing's approval to roll out its ChatGPT rival called Ernie. Nike stocks fell for a record 9th straight session on Tuesday after its customer Dick's Sporting Goods reported disappointing second quarter results. This marks Nike's longest losing streak since 1980, and it comes as concerns over elevated inventory stockpile and Chinese sluggish consumer recovery builds. Nomura Securities International will pay a $35 million fine to the U.S. government over securities fraud dating back to 2009. A government investigation found that the firm misrepresented the facts to cheat its customers in trades. The company had previously paid over $20 million to victims as part of a settlement with the SEC. The former head of JP Morgan's precious metals desk and his top trader have been sentenced to prison. Michael Nowak and Greg Smith were both convicted of market manipulation and spoofing last year. Spoofing is the act of placing fake orders in a bid to manipulate prices. Right, we have plenty more to come on Daybreak Asia as we're seeing fluctuating gains and losses in Asian markets. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this, put it over here.
Not cool. Not cool. All right, I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Breaking news out of Japan. We are getting the latest PMI numbers, a composite for August in Japan. The preliminary number coming in at 52.6, which is a slight improvement from the previous month. It's also in positive territory, expanding all of this year. When it comes to the PMI for the manufacturing sector, 49.7, a slight improvement from 49.6 in the previous month, but is still in contraction territory for a third consecutive month. The services side of things, strong, 54.3, an improvement from the previous month. It's really the manufacturing side of things where we'll continue to see the slump across Asian factories. Of course, China's manufacturing slump is not helping, and domestic demand not really being able to offset that either. So for Japan, manufacturing PMI, a third consecutive month of being under that 50 expansion level. Let's now turn to Belle for a broader check of the markets. Belle.
Thanks, Sherry. Yeah, we're just over 30 minutes into the session now for Sydney, Seoul and Tokyo, and I've got the GMM function here. Not really to point out any big move in particular. In fact, it's really about just indicating how subdued trading activity is so far in the session, because when you take a look at currencies, for instance, we're fairly steady. Commodities as well, perhaps still up 1% in Shanghai. That's of more interest to us. It could be a signal, for instance, of that support measures coming through for the Chinese yuan, and that can help still buyers in Shanghai who are more in a better position when you do have that currency strength in the local currency there. In terms of bonds, again, fairly steady in the space, not really seeing any big moves there. And equities as well, fairly range-bound in the session. When you change it on, take a look at turnover. We talked about this at the top of the hour, but just pointing it out again, trading volumes are very, very muted so far in the session, about 30% lower than where they would typically be at this point on a 20-day moving average basis. So it just tells us how much investors are sitting on the sidelines here ahead of those key events that are coming up later this week, because we've got Jay Powell speaking at Jackson Hole on Friday. That's going to set the stage for the outlook for rates over the coming months. And then as well, you've got NVIDIA earnings. They're due on Wall Street after the bell on Wednesday. And this chart here, taking a look at the implied move. So options tells us that the pricing of that, so we could see around a 10% jump in the stock. That's quite elevated when you compare it to other reporting periods over the past year or so. Why NVIDIA is so important for us? Well, of course, it's been up more than 200% over the course of this year. It's a key AI play, but Paul, importantly as well, it makes up about 3% or a weighting of 3% on the S&P 500. So certainly those results from NVIDIA are going to be another factor alongside Jay Powell speaking at Jackson Hole to set the tone for markets over the coming few weeks.
Thanks, Belle. Well, Thailand finally has a new Prime Minister, ending 3 months of political stalemate. The Pheu Thai party's Shrita Thavisin won a parliamentary vote with support of military-appointed senators. Bloomberg's Avril Hong joins us now with the latest. So, Avril, we've got a new Prime Minister in place. What's next for Thai politics?
That's right. We have a new Prime Minister in place. He's receive the endorsement of Parliament. This is a man that's gotten the support of forces that align with the palace. So what's next? This is a promise to end the political deadlock that has gripped the nation for months. And we could see this paving the way, right, for the formation of the next government. Now, Shrita's Pheu Thai party is effectively helmed by Thaksin Shinawatra. So the question on everyone's minds is, what role will Thaksin play in Thai politics going forward? And this is a man that, after 15 years of self-imposed exile, returned to the country on the same day that the prime minister vote was held. It's been said that he has effectively cut a deal with the military establishment. It could see him serve less time in jail. He's also expected to receive a royal pardon. Now, all eyes will be next on what happens when Srettha goes on to form his cabinet.
Avril, of course, we know that Thailand's economy has started to slow down, is one of the slowest growing in Southeast Asia. So what's the first order of business for Srettha?
Well, it will be to follow up on those campaign pledges and to fire up the economy. His Pheu Thai party had previously promised to hike the minimum wage, and the government has also pledged to give hands out on cash, on land, on subsidies as well. So it will really be on how or whether they indeed follow up on these campaign pledges. And as you said, Thailand is among the slowest going in Southeast Asia, but so far it's been pretty well received. The idea that there is some semblance of stability returning to Thai politics. Thailand's stock market actually was the best performing in Asia on Tuesday.
Bloomberg's Avril Hong there with the latest on Thai politics. We're also watching the political environment in Myanmar. Its ruling military junta has hinted at delaying its plan for a general election. The State Administration Council says a nationwide census scheduled next year should come ahead of parliamentary polls to prevent irregularities. A UN report says about 1.6 million people have been displaced since the military seized power in 2021. Still ahead, hear why Cornell University's Ishwar Prasad thinks many of China's problems are a consequence of its own policies. He joins us live next. This is Bloomberg.
And the markets are on the move.
The focus, of course, is on Ukraine.
The market is so hyped up about AI.
Unless we see dramatic changes, it's just going to keep getting hotter.
For further market analysis, we're going to go get straight to some breaking news. We'll have a full roundup.
Going through some of the numbers and what investors should make of them.
We have so many important conversations.
Let's check in what you need to know.
It's the start of a busy period for earnings in China's financial sector. China Life, China Construction Bank and China CITIC Bank are among those reporting on Wednesday. And those reports, of course, coming with property developer Country Garden slipping towards a potential default and a big private wealth manager missing payments to investors. For more, let's bring in Bloomberg opinion columnist Shuli Ren. Shuli, how can China's Lehman Brothers moment not be here already?
That's a very good question. With the property wars and the fiscal, local government fiscal problems, in anywhere else in the world, there will be a Lehman moment. There will be a blow up. But I have to say that the Chinese government has a very, very different political system. Let me just give you an example. Banks. We see that U.S. big banks, they have been rushing to sell their loans to commercial real estate projects, right? And in that way, like in China, they will just pretend to extend, basically. All the property loans, they're no good. That's okay. We will extend it. Local government bonds, it's okay, we'll extend it as well. And that way, no one does any fire sale, no one writes down any of their books, and they will just continue on. That's why they have been basically just kicking the cans down the road and rolling the balls bigger and bigger until next decade, I guess.
Shuli, is that why you argue in your latest opinion piece, you're actually titling your opinion piece, China needs its own Lehman moment now? Is this why China actually needs this sort of scare?
I think so. I mean, the Chinese government really needs to stop pretending and extending. Let me just give an example of municipal debt, right? This is not the first time China tries to resolve this problem. In 2014, they did a huge debt swap. They did a huge bailout, basically bailing out 2/3 of municipal debt. And back then, a decade ago, it was a 12 trillion yuan. And they thought that the hidden debt problem was going away. And now we are 1 decade later, they're much bigger than before because local banks and the asset managers say, oh, this is a Beijing port. Let me continue putting money into really bad, very poor provinces. And this is why I think the Chinese government needs to teach the markets and banks a moral hazard lesson.
Yeah, is letting something blow up, though, a politically viable answer? Would that be a violation of the Communist Party's social contract?
I think the Communist Party, they do take stability as the priority. Like President Xi Jinping keeps on talking about stability. But you'll be surprised how abrupt its policy making is. And then recall like a year ago, we were at COVID zero, right? And people would say, oh, China would never let go of COVID zero until 2024 or 2025. And all of a sudden in December, they basically let the Chinese people go for herd immunity. So you'll be surprised how abrupt and self-correcting the Chinese government can be.
Bloomberg opinion columnist Shuli Ren there. Let's bring in our next guest, who says China's long-standing problems are coming home to roost. With us now is Ishwar Prasad, senior professor at Cornell University. He previously served as the head of the China division at the IMF. Ishwar, really great to have you with us. We were just talking to Shuli about this potential Lehman moment in China's economy, that it hasn't come yet, but it actually needs one. What do you think?
No, I think Ms. Renshuli is certainly right that some more market discipline would help the entire financial system, and the government does seem to want to introduce market discipline. It has, in fact, in the last few years tried to introduce an explicit deposit insurance system rather than a 100% implicit deposit insurance of the entire banking system. It's tried to get the local governments to be subject to market discipline. The difficulty, though, is that the incentives really haven't changed because people have come to believe that whether it is trust companies, whether it is banks or local governments, that ultimately Beijing will step in and not allow anything more than minor accidents to take place. So market discipline hasn't really worked very well yet. And the additional problem is that for market discipline to work, you not only need financial markets operating well, you need a better regulatory framework, you need better corporate governance and transparency, and you need better application of the rule of law. So those elements of the institutional framework are not quite in place yet. So what the government wants to do, introduce market discipline, isn't quite happening yet.
Are you seeing, though, moves in the right direction? I mean, the way that I see some of the support that is coming from Beijing, and it really hasn't been the type of bazooka style that we saw in the past. There have been piecemeal solutions for problems across the economy because I get the sense that Beijing doesn't want to create another bubble.
Right now, there is a confluence of very difficult domestic and external factors coming into play. Now, China is a very large economy and cannot export its way out of its problems, especially at a time when the rest of the world economy is weak. Domestically, you have the property market facing very significant headwinds in addition to some financial distress that is spreading to some developers as well as some banks that are very exposed to those developers. then you have a problem of very weak private sector confidence, which is showing up in very weak household consumption, private investment that has basically collapsed. And on top of that, you have slowing growth momentum, rising youth unemployment, which is a problem for social instability, and all of this feeding into weakening confidence. So what the government needs to do is certainly some amount of stimulus, but they really need to reinvigorate private sector confidence. And that is going to take a lot more than stimulus at this stage.
So in terms of private sector confidence on your travels to China, what do private business people tell you? What's their prescription for getting out of this?
Now, towards the end of last year, when Xi Jinping ascended to a third term by amending the constitution, essentially there was a tightening up of restrictions on the private sector. We saw that already at the beginning of the previous year in 2022, when some of the tech titans were cut down to size. Then we saw the private sector enterprises in the medical sector, in the education sector being also put under significant constraints. Now, Beijing has been trying to send a message this year that the private sector is back in favor. And this is very important for Beijing because the reality is that especially with unfavorable demographics and a variety of financial system problems, the only way for China to grow in a sustainable way is to generate productivity growth. The labor force is shrinking. Relying on inefficient investment is not the way to go. So you need productivity. You also need employment growth. And the reality is that the private sector is much better at generating productivity growth and employment growth. The problem is that the financial system is not directing much resources, especially to small and medium enterprises that are good at both these things. And more broadly, the private sector doesn't seem to believe that Beijing is on its side. It seems to believe that Beijing really favors state enterprises. So getting over that hurdle is going to take a lot more than words. It's going to take some concrete actions.
We often talk about the risk of Japanification for China, but might that be a best-case scenario? Because if we think about Japan's lost decades, during that time, Japan never got involved in geopolitical disputes and other arguments with its key trading partners. So could it be Japanification squared?
That certainly adds a layer of complexity, Paul. The fact that you have this uncertainty that makes it very difficult to see how China is going to be able to accomplish its objectives of becoming a higher tech, higher value-added economy, because their domestic or indigenous innovation program is not working very well so far. China still needs access to foreign technology in addition to foreign markets, and the rising tensions with the US and the West are certainly not helping at this stage. So I think China really needs to smooth out tensions with the rest of the world, but more importantly, start putting in place the market-oriented reforms in addition to the institutional reforms that I spoke about earlier, that many in China itself have been arguing for a long time are necessary. And there has been very slow progress in the right direction for a few years, but I fear that some of this has been reversed over the last year or so. So getting back on track with those reforms, especially liberalizing the financial sector and moving towards a more market-oriented economy and showing with clear signs that the government is willing to improve the institutional framework, as I referred to the corporate governance system, corporate and governance, transparency, auditing and accounting rules. That framework is really going to be important for China's balanced growth.
Japan, of course, has its own problems, especially with demographics and their very large elderly population. China, not quite there, but demographics is becoming challenging. And even without it actually becoming challenging, the fact that youth unemployment is so high, we're talking about 1 of 5 young people in China not being able to get jobs. And when you were talking about really business confidence building, you really need transparency for that to happen. And Beijing is not even going to release that youth unemployment data anymore. How problematic is this?
That's absolutely spot on, Sherry. I think in terms of confidence building, which is really key right now, the fact that the Chinese government tries to hide bad news by essentially making those data unavailable. And it's not just the youth unemployment numbers, but a variety of other data series that over the years have been essentially squashed because they're seen as conveying bad news. This is not quite the right way to go. And on the unemployment, it's certainly a very strange and dichotomous picture because on the one hand, the labor force is shrinking. On the other hand, we hear about rising unemployment, but it speaks to the fact that there seems to be a very significant mismatch in the labor market, and the labor market is not really functioning well in terms of generating good jobs that match up with what the economy is trying to do and what the labor force can offer.
All right, Eshwar Prasad, Professor at Cornell University, thanks as always for your insights. And you can watch us live and see our past interviews on our interactive TV function, TV Go. There you can also dive into any of the securities or Bloomberg functions that we talk about. And you can become part of the conversation by sending us instant messages during our shows. This is for Bloomberg. Beg your pardon, Bloomberg subscribers only. You can check it out at TV Go. This is Bloomberg.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
DOJ or other authorities
could face bigger challenges.
Britain's next.
It was going to keep bringing World Cup. This is a three.
As the economic picture does. The OK is getting ready to make a decision.
Take a look at how Asian markets are trading at the moment. We're seeing a little bit of a mixed picture because the Nikkei is gaining for a third consecutive session. We're seeing utilities, real estate, consumer staples gaining ground, although energy and materials are leading the losses. And this coming at a time when the Kospi is now reversing some of those gains that we saw in the previous session, is down 0.25%. The Korean won also under pressure, and above that 1300 level, 1338 is a level right now. We are seeing also Kiwi stocks and Australian stocks gaining ground at the moment, but really the lead from Wall Street not quite strong. We saw U.S. stocks falling and reversing yesterday's gains, so perhaps a little bit of a mixed picture across markets in Asia. We're tracking oil prices at the moment, given that we continue to see that downside pressure and energy stocks suffering from it, Paul.
All right, just want to get you across some breaking news. We're hearing that Huawei, or we're reporting that Huawei is building a secret network for chips. This is a warning from a trade group. Bloomberg News just reporting now that Huawei Technology is building a collection of secret semiconductor fabrication facilities across China that would skirt U.S. sanctions and further the nation's technology ambitions. The U.S. Commerce Department, of course, put Huawei on its entity list back in 2019. So a report that Huawei is building a secret network for chip manufacturers, according to a warning from a trade group. Sherry.
And Paul, we're watching for the markets open across China. Shares tied to the services sector in China emerging as a rare bright spot, with consumers continuing to spend lavishly on food and travel. For more, let's bring in the Asia Stocks reporter John Cheng in Singapore. John, so what can we expect from China markets today, especially after we saw that sudden late market rally yesterday?
Yeah, yesterday the sudden rally in the afternoon was very baffling for a lot of traders. People we spoke to were scratching their heads on why was there such a sudden surge. So there was some speculation on maybe some safe-back funds were entering because we see all the benchmarks jumping at the same time, but that's just speculations. Again, like all the benchmarks have been very oversold, so technically a rebound could be possible. And amid the market gloom, we are seeing, China's economic is slowing down, but then we are also seeing some bright spots in certain pockets of the sector. For example, Chinese consumers, they're not spending on big ticket items like autos or home appliances, but they're spending a lot on restaurants and domestic traveling. So we are seeing those shares tied to those sectors really outperforming the broader market. So, the broader mood is quite gloomy, but then we're still seeing some pockets of strength there.
Major China banks are going to be reporting earnings in the coming week. What can we expect from those earnings, given recent concerns that we're seeing on margins and property risks as well?
Exactly. So some analysts are saying the second quarter net interest margins could see some small improvement from the first quarter, but overall, the margin pressure is still there. The smaller than expected cut to the LPR rate earlier this week is just another evidence that, the margin pressure is still very persistent in China banks. And then people are also worried about, if the property crisis continue to spiral, then China banks are bound to take a hit because they have so much exposure to the property sector. So, all in all, people are still very worried about the asset quality and also the ongoing margin pressure at China banks. So those will be carefully watched by investors and traders in their upcoming earnings reports.
John Cheng, Asia Stocks reporter, joining us from Singapore. And of course, these are the stocks that we're watching at the market opens in Hong Kong and mainland China. HKEX and the Tracker Fund of Hong Kong in focus. China continuing to exempt individual investors' capital gain taxes for the Hong Kong Stock Connect. Baidu and Kuaishou did better than expected in their second quarter results. We also have more earnings. Some of the big names that we're expecting them include some of those big banks. Bloomberg Markets China Open is next. This is Bloomberg.
I'm going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California. If you think about the constituents that are benefiting from what we do every day as a team, it's a very rewarding job.
The largest public pension fund in America is run by a Canadian investor. Nicole Musico is the Chief Investment Officer at the $460 billion California Public Employees Retirement System, or CalPERS.
I got this call, and the call was about the opportunity to come and be the Chief Investment Officer of the U.S.'s largest pension plan. And to be honest, at first I thought, well, that sounds like a crazy idea. Why would I do that?
Musico did have a background in pensions. She spent 16 years running private investments at the Ontario Teachers Pension Plan. But by the time she got the call from CalPERS, she had left for private equity and was a partner at the sports, entertainment, and media-focused firm Redbird. And returning to the world of public pensions wasn't exactly the plan.
And I said, this is a really cool opportunity for me to be able to kind of take my personality and the 16 years of experience I had in the Canadian pension system and really try to apply those tools to the U.S. system to really make a difference.
Musico took over in February 2022 in the beginning of the worst year for the stock market since 2008. Under her leadership, CalPERS boosted its allocation of investments in private equity and credit.
The attraction to the Canadian system was the fact that I had, within the Canadian system, so much private market experience.
In fiscal 2023, CalPERS notched a 5.8% gain, much better than the loss in fiscal 2022, but still below the fund's 6.8% target. The average person who does not live in California, what is CalPERS?
Well, CalPERS is the U.S.'s largest pension plan. It stands for the California Public Employee Retirement System. And so we invest the pension money of 2 million members across the California, and we often say we serve the people who serve California.
Okay, so there are 2 million people who are members of CalPERS now. These are people who have been employees of the California State Employment System, or they are currently employees?
It's a mix of both. So we have around 775,000, don't quote me on that number, but pretty close to that, of retirees. And we have just over 800,000 active members.
Okay, so if you work for the California state government, you don't get Social Security, you get this, is that right? Or you get both?
You get both.
Or you get your Social Security and you get the retirement system benefits of CalPERS.
Correct. And you also get health benefits. So in 1932, CalPERS was formed through the legislature. And then in 1962, CalPERS was then given permission, again through the legislature, to issue health insurance.
Okay, so let's suppose you work for California state government entity for 25 years. You retire. What do you get as your benefit from CalPERS? You get a certain percentage of your salary, or do you get whatever you can get them in good rates of return?
It's a mixture of years of service, and then there's a formula. Years of service times a certain percentage, depending on which of the groups, which of the members you are a part of. But essentially, it is a very it's a very healthy pension to allow you to have retirement with dignity is what we like to think of.
The average person who works at CalPERS, at what age do they retire?
You can retire, I believe, as early as 52 for some of the members who were members prior to, I think it was 2016, and 55 thereafter.
And CalPERS is the nation's biggest state pension fund, is that correct?
It is, correct.
How big is it?
We are at around $465 billion today.
$465 billion.
Correct.
Now, your job is to oversee the investment of $465 billion.
Yes, it is.
Do you actually have the money you need to service the obligations you have? Because many of the state pension funds are not really sufficiently, I would say, capitalized at this point.
We're still in around the 72-73% funded status. It depends. You know, we obviously keep track of this all the time. I think we hit a peak of 80% pre-COVID. We're down to around 72% funded. But again, we think through the next 20 years, and that's why we have our 6.8% target so that we can be fully funded in the 20-year period.
So fully funded means that every dollar you owe somebody, theoretically, you have a dollar to cover them, but no pension fund, or very few in the United States, actually are fully funded?
Very few in the United States. In Canada, it is different. They are mainly fully funded in Canada.
Well, let's talk about Canada, because
Sure.
it's a country you know pretty well.
Yes.
So where were you born?
I was born in Toronto, and I grew up in southwestern Ontario predominantly.
And when you were growing up in Toronto, did you say, I want to run CalPERS someday?
No, I did not. I think from the time I was 2 or 3, my mom said I wanted to be a doctor. And so when I went into university, I went in and studied kinesiology, thinking I was going to do sports medicine. In my 3rd year, thinking I still wanted to do medicine, I had an anatomy course and I had my own cadaver for the year. And let's just leave it as, once I had to work with a cadaver, I quickly realized I was not cut out for working on broken bones or medicine. And so I pivoted.
All right, so you went to undergraduate business school and you got a degree. Does that take 1 or 2 years?
That was a 2-year program, so I ended up spending 6 years in undergrad.
You got 2 degrees. So when you have your business degree, what did you decide to do then?
My first job out of undergrad was working, well, it was then Solomon Smith Barney and then Citigroup by the time I left.
Did you ever, say, I want to stay here and become CEO or something like that?
I actually really enjoyed the experience working in investment banking. I had a summer job prior to my investment banking role where I worked on a trading floor at Ontario Teachers, and where I ended up being later employed, and I'll come back to that. But they had this really neat rotation program where we got a glimpse into what the different groups or the different asset classes. And that was my first introduction to private equity. And so I enjoyed investment banking, but having, the opportunity to see what private equity was about, I really set my sights on getting into private equity after grad school.
Okay. So you were living in New York when you were doing this for Solomon?
I lived in Toronto and New York. I did a stint in both places.
And so you had enough of New York, you moved back to Canada?
I did. I moved back to Canada to get my MBA. And once I graduated from Western's MBA program, that's when I joined Ontario Teachers.
Okay, so Ontario Teachers is another big pension fund based in the Toronto, Ontario area.
Correct.
And represents all the teachers, presumably. So what area did you specialize in?
I went right into the private equity group and spent 15 years on the private equity side, and then I ran the public equity side of Ontario Teachers. I spent, within that period of time, I spent 1.5 years, 2 years in Hong Kong. I opened the Asia office for Ontario Teachers and then came back to Toronto to run public equity.
In the investment world, nobody spends 15 years in anything, so
I know.
You must have really loved the job.
I did. So I was hired onto the direct investing team, and right out of the gate, we set out to really create a direct investing program, and that's kind of what's referred to as the Canadian model now.
For those who aren't familiar with Ontario Teachers, it was a leader in actually doing deals directly.
Correct.
And so, unfortunately, you're saying, you private equity people, we can do the same thing you do. We don't need you. We'll do it ourselves. Was that nice to the private equity people to show them that you could do the same thing?
Philosophically, we didn't go that far. We basically said, we want to do direct investments, but we want to have a smart friend beside us. And so most of the deals, and certainly the best performing deals when we went and did kind of a look back after 10 years, were really with our GP friends. And so while we may not be paying a fee and carry on the direct deal itself, we often had another smart friend at the table.
Okay, so after 15 years of that, you said, I want to be on the other side. I want to actually be a private equity investor in a private equity firm. Is that right?
Yes, that is, yeah.
And what firm did you join?
Redbird Capital Partners.
Now,
Redbird was started by Jerry Cardinal,
Correct.
who was a former Goldman partner.
That's right.
And it specializes, I think, in entertainment, sports, media, among other things.
Correct.
All right, so why after 2 years did you decide to leave?
Well, I got this call, and the call was about the opportunity to come and be the chief investment officer of the U.S.'s largest pension plan. And to be honest, at first I thought, well, that sounds like a crazy idea. Why would I do that? And I said, this is a really cool opportunity for me to be able to kind of take my personality and the 16 years of experience I had in the Canadian pension system and really try to apply those tools to the U.S. system to really make a difference.
But in the private equity world, you get a carried interest,
yes.
You get nice compensation.
Yes.
Generally, people go from the public pension fund world to the private equity world. They don't go back because sometimes the compensation is less.
Oh, it's definitely less.
So why did you want to take less compensation? Is it that you like California that much? You wanted to help California, or you just thought it was just a big platform?
I just thought where I am in my career, I'm still in my 40s. I have lots of time to get back into private equity, which I'm sure ultimately that's where I'll go back to. But I thought to be able to commit, I said to the board, up to 5 years of my time to really try to transform U.S. pension felt like a very, intellectually challenging and a good thing to do with the tools that I have.
So the United States has a lot of very talented investment professionals. Why do you think they needed to go to Canada to get somebody to run the pension fund of CalPERS? Did anybody ever say to you, hey, you're a Canadian and we're an American fund? Or nobody
cared about that? What do you know about that? Yeah. No, I think people did care. I think the attraction to the Canadian system was the fact that I had, within the Canadian system, so much private market experience. And if you think about where CalPERS is, or was specifically, private markets is still not a huge part of our strategic asset allocation. And so what I really brought was a bit of a different angle where I could really bolster the private market investing.
So when you go to a cocktail party and say you're the chief investment officer of CalPERS, what's the normal reaction?
Are you crazy? In the last 5 years, we're just below the 6.8. But over 20 years, as long-term patient investors, we're targeting a 6.8% return.
Pensions have come a long way from their beginnings in the Roman Empire in 13 BC. Back then, Roman soldiers with 25 years of service received a lump sum worth about 13 times an annual salary. Fast forward to the 19th century, big American cities like New York began offering payments to police officers and firefighters after getting injured on the job. And in 1911, the Commonwealth of Massachusetts became the first state to offer a pension plan for general state employees. The federal government followed soon thereafter with the Civil Service Retirement Act of 1920, and by the middle of the century, public pensions were commonplace. Today, the largest public pension in the U.S. is the California Public Employees Retirement System, or CalPERS, with more than $400 billion. But pension plans throughout the country were hard hit in 2022 as the combination of inflation and high interest rates battered market returns. CalPERS alone lost nearly $30 billion in the downturn. Now, in the search for higher returns, U.S. pensions are looking beyond public equities and fixed income by boosting their positions in alternatives like private equity, hedge funds, and real estate. By the end of last year, public pensions invested a record $1.6 trillion in alternative assets.
Today, CalPERS tries to get what kind of rate of return? In other words, it's obviously a difficult investment environment, but if you've got $400+ billion to invest, what kind of rate of return are you trying to get overall on that amount of money?
So we look at a 20-year rate of return of 6.8%, so that is our current target. And I'd say over the last 20 years, we've been able to hit that. The last 10 years, we've also been able to exceed that. In the last 5 years, we're just below the 6.8. But over 20 years, as long-term patient investors, we're targeting a 6.8% return.
So if you have this much money as you have, this staggering amount of money, why not just buy U.S. Treasury bills with long durations? You'll get a 5% yield, and just isn't 5% enough?
It's not. Unfortunately, it's not. We really do need to hit close to that 7% to stay funded and to be able to meet our commitments.
If I'm a retiree at CalPERS, should I worry that you're only 80% or so funded? Or should I not worry because you're really likely to be able to pay off your pension to me?
Yeah, I don't think you should worry. I think the reason we've set up and have started to introduce things like private market asset classes, the portfolio is extremely diversified. Managing to a 6.8% return will get us to a funded status.
Today, we've obviously had inflation that's pretty high in the United States for the last couple of years. Obviously had it in Canada as well and around the Western world. Does that make it harder to invest and get the rate of return you want if inflation is relatively high?
Sure it does. I mean, it's obvious inflation is having an impact across the portfolio. We have to be mindful of what the knock-on effects are going to be within the different asset classes, for example. And so it's fair to say right now we're thinking a little bit harder and a little differently maybe about infrastructure as an asset class, for example, because of the inflation protection that it can provide. And so inflation absolutely has an impact on our portfolio, as does the interest rate environment, which has clearly changed the cost of capital across all the asset classes.
Let's talk about the interest rate environment.
Sure.
Do you sit there in Sacramento and say interest rates are going to go up again? Do you try to make projections of what the Fed's going to do in advance, or do you wait till they make the decision and then you react to it?
We really try to have discipline around being long-term investors and think about our strategic asset allocation as our North Star. And so rather than trying to time the market, we're certainly mindful and we think about where interest rates are, but we're not trying to time the market.
So the United States has had some challenges recently, high inflation, and so forth, high interest rates. But what about outside the United States? Does CalPERS invest outside the United States? And if it does, is that controversial because your employees are all in California? Are they saying ever, look, let's invest our money in our country? Do they ever say that? And if not, and you're allowed to invest outside, what areas do you like outside our countries?
So we do invest outside of the U.S., but we are close to 80% invested in the U.S., so I'll start with that. We do have investment in California, and we track that. We make sure we really understand where we're putting the capital to work in California, but even on a relative basis, that's quite small, probably about 10% of our portfolio. We have certain areas where we are really getting pushback on investing right now, and China would be one of those areas, and so we've got less than 3% invested in China. Areas like some of the emerging markets we're starting to think more about. We probably have about an 11% exposure to emerging markets, and we're a bit hesitant on Europe right now. We're kind of holding back on putting more capital to work in Europe.
But do you get political pressure to not invest in China?
We do.
And the money you've already got there, are you going to try to take it out right away, or just say, look, it would be foolhardy to take it out right away. It'll come out when it comes out?
We're being mindful about our exposure in China right now so that we can avoid having any big losses if we were to be told overnight to divest of China.
So in the large endowment world that you're in, the pension fund world, there are two ways of doing things, I guess. One is you bring all the investment professionals in-house, you buy the stocks yourself, you do the deals yourself, as you did at Ontario Teachers to some extent, or you outsource it, you have money managers doing most of that. And what is the style that you use at CalPERS?
It varies across the asset classes. Our fixed income program is predominantly in-house. We don't have fundamental portfolio managers, but some of the execution is done in-house on the public equity side. On the private market side, it's generally all managers. Private equity, infrastructure, real estate, we're partnering with general partners, GPs, to invest on our behalf.
Recent years, there's been a big concern about ESG. ESG is kind of an acronym for worrying about environmental and social and governance issues. What is your view on ESG? Are you the school that says it's been oversold, it's not as important as it should be, or you think it's not getting enough attention?
We have spent a great deal of time trying to really move the needle on climate solutions. we kind of think of ESG in two different ways. ESG as a framework for investing, so almost think about it through the risk lens, and ESG through the investing lens, and trying to think about how can we invest more sustainably, whether that's into more diverse managers, as the example I used, or into climate solutions, for example.
So there's been a backlash against ESG in some circles, political and other circles. Do you feel that backlash at CalPERS, or you're not worried about the backlash against ESG?
We think about it all the time. I mean, we have different pressures. So we're really trying to keep the politics of ESG out of our boardroom and out of our investment decision making. And we really believe in engagement. We think if we have a voice at the table, that we can be a lot more productive in helping the overall climate problem rather than just focusing on our own portfolio.
Are you worried about real estate in the United States? You're a gigantic real estate investor, and real estate and office buildings in big cities like Sacramento, Los Angeles, New York, they have some struggles because people are not coming to the office that much, and therefore the landlords are probably not going to have tenants renew with the same amount of space that they once leased. What do you think about that concern?
Yeah, I think, real estate is a very broad space to invest in. And so there's multiple sectors within real estate. And so certainly the office space sector that you're referring to is one that we've been really, digging into to see what our exposure is. We're very well diversified across a number of different sectors within real estate. But certainly within office buildings, if they're not the Class A office buildings, there probably is going to be some real pain to be felt still as we're starting to adjust to where interest rates are.
Let's talk about AI for a moment. There are two aspects of it I'd like to ask you about.
Sure.
One is, as an area in which to invest, there seems to be a gold rush into AI. Everybody thinks AI is changing life as we know it. Do you think there are great investment opportunities there, or is it too early to know?
For a large pension like us that doesn't have the in-house deep expertise, it's too early for us to know specifically. We're taking a different path. We're doing a whole refresh on our own technology system, and we're bringing in outside help to help us make sure we're set up to succeed in a world that is going to be absolutely touched by AI. So our investment systems, all the technology that our investing program resides on, we're taking a look at. I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
You've been a woman in the investment world for quite some time. Do you feel that it's getting better to be a woman, easier than it was when you first started, or do you think it's still challenging to be a woman and rise up as you have in the investment world?
I think the area that I'm most focused on right now is educating young women about what the industry is and the possibilities. There's so much breadth. There's so many opportunities, whether you're talking about working in a pension plan like I started my career, or working as a GP and everything in between. And so I think there's been a real push, and I've seen great momentum in educating young women to come up into the organizations. There's always going to be a bit of a glut in the middle of one's career if you're thinking about women that go through perhaps having a family, et cetera. And so when we look at our own diversity numbers, we always see, unfortunately, a bit of a glut in that middle career part. But we're also starting to see more and more women coming back into the industry.
Do you have any hobbies? Do you have any things you're really passionate about outside work?
My son and I have become avid Sacramento Kings fans, for example. We were season's ticket holders and didn't miss a game. Well, didn't miss many games anyway this past season. But outside, I mean, California, living in Sacramento, we have access to Lake Tahoe. We love to ski. I love cycling. I love running. And so it's a wonderful place to live if you like outdoor adventures.
Would you recommend this job to somebody in the future? You're going to do it for X number of years, but you think this is a good job to be the Chief Investment Officer of CalPERS?
I think if you're a mission-driven investor, there's really no better feeling than knowing you're impacting the lives of 2 million people that are serving California. I mean, if you think about the constituents that are benefiting from what we do every day as a team, it's a very rewarding job.
What is the best investment advice you ever received?
I guess just not to try to time the market, to be a patient investor that has a well-diversified portfolio.
For the average investor, what do you think the biggest mistake the average investor makes? Is it getting out of the market too soon or coming in too soon? What is the biggest mistake the average investor makes in your view?
In my view, I think we certainly see it a lot in recent years, is this FOMO, the fear of missing out. And so jumping on a bandwagon, which is probably way too late, coming into the market, into ideas that you have FOMO over, that you're seeing others have made money on.
So if you're at a cocktail party and somebody says, look, I'm not an investment professional, I know you can't give advice that much, but I have $100,000, it's burning a hole in my pocket. What should I do with $100,000? I need to not lose it, but I can take some risk. What would you tell somebody to do with $100,000?
That is the specific question that I cannot answer.
Can't answer that question. Okay.
I'm sorry, David.
You can't give advice on anything?
No, I can't.
Oh, okay. So I guess I'm not getting free investment advice for you.
You're not today.
Okay. When you're investing your own money, do you invest it yourself or do you have outside managers managing your money?
I invest my own money myself, and I'm obviously, having been a private equity partner for some time, I have a real affinity to more private market investing. Given the industry I've been in, I have lots of exposure to public markets, but I spend a great deal of time thinking about where the opportunities are on the private market side.
Do you agree with my view that private equity is the highest calling of mankind?
I love private equity. I do.
The top names in business are on Bloomberg.
I think there is a case for forward plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority. Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Good morning. Happy Wednesday ahead of the session here, 40 seconds away. We're set for a higher open onshore and maybe offshore, and I'm judging that. I'm using the sort of early instruments to determine that. Also, Asia's doing quite well. We're gliding higher among most of the markets that are open right now, so we could see day two, question mark.
Yeah, question mark.
Yeah.
It seems like there's not a whole lot in the stimulus sort of news, not a whole lot when it comes to Country Garden and the developers, and so it seems like we're just focusing on earnings, which is where you're seeing a lot of price action here this morning on the back of some of the tech names. Also when it comes to ANTA, the consumption space as well. So this is how we're looking at with the open here, the pre-market in Hong Kong. Just seeing some slight downside here, so maybe those futures are suggesting, though, we could be seeing another day of gains. We'll see how this all plays out, but at least right now you're seeing Hang Seng slightly in the green at the get-go here. Shanghai is just about a fifth of 1% for the CSI 300. Dave mentioned, right, despite that rally yesterday, foreign funds were still net sellers of Chinese stocks for 12 days, which is a record sort of streak already. You take a look at how these sectors by sectors look right now. It's tech that seems to be seeing a little bit of downside, about a third of 1% on HS Tech here. Financials, of course, we talked about the banks, insurers that are starting to report this week. Developers are not doing a whole lot. And MSCI China, we're holding just around that 58 level this morning. Dollar China, it was another day of RMB support, north of 900 pips against consensus or from consensus. We're watching those yuan funding costs that are rising now, so more sort of signs that maybe policymakers are trying to really squeeze out those bears out there here. You're still seeing some strength across the offshore RMB at 729. 730 could be that level, as Hao Hao mentioned, that it could be that line in the sand. We'll watch how the onshore rate comes out. We're now around 728 this morning. Crude markets are slightly lower, but then again, Dave has mentioned about iron ore, where we've been up for several days now, right? I think it's a 6 day
6 or 7
in China. That continues for another day. Anta Sports, there you go. So basically everything on this board, Anta, Baidu, Kuaishou, all beat. The only one that missed was Sunny Optical. That's why you are seeing a downside about 3%. But Anta Sports, there's been a lot of concern about this reopening story, whether this is going to be a sign of things slowing down. But that stock, pretty relieved right now.
Yeah, there we go. A couple of other stocks that we're tracking here as well.
Nike suppliers, right?
Yep.
Oh, that record route that we saw on the stock overnight.
Quite a big one, actually.
It's been down, I think, 9 days. Or I haven't lost track.
Just dump it.
China concerns certainly is weighing on that. We're watching some of these suppliers like Stella, Top Sports, not a whole lot of movement there. And salt stocks.
Yeah,
that continues to continue to rally on the back of the before this release of that Fukushima water.
Yeah, we need to talk more about this story. It's a bit nuanced. In case some of our viewers missed it, right? So tomorrow, Japan will start releasing some of the treated wastewater from its nuclear plant into the sea. And we've certainly heard a series of reaction from governments. We've heard from Hong Kong. They're going to be banning certain products. I think China's fairly upset at it. South Koreans have also issued a statement. Anyway, we'll talk more about this. But market reaction.
But
here,
salt, that's what you need to treat it, right? So I think that's why you're seeing that market impact. Let's take a little bit more about just overall what we've been seeing when it comes to the financial system in China, facing increasing pressure from ballooning debt, and a lot of questions of whether we've actually hit this sort of Lehman moment in China, and can we avoid it? Shuri Ren had an interesting piece.
She did, and in fact, we're taking an excerpt from that, and essentially what she's saying is that we do need something of a similar magnitude type of scare to then cleanse the toxic debt that has been building really for way too long in this economy and various parts of it. For more on the growing debt crisis, let's bring in perhaps one of the foremost experts on the topic here, Charlene Chu, Senior China Macro Financial Analyst at Autonomous Research. Charlene was among the first to flag really many years ago some of the risks related to the shadow banking sector. Charlene, it's very nice to see you. Good morning from the Asia Pacific. I mean, you've tracked the story for as long as I can remember. I guess to start off, can you compare this acute episode we're in right now with previous bouts of stress? How does this current one stack up?
I think what's very different today is the macro backdrop is just so much weaker, with 2-year property sector collapse, decline in growth on the export side, and really weak consumer confidence. We have not been in this position at any point in time, even if we go back to the 2015 slowdown and the pain that we were seeing then. So this really is unprecedented, and I think it does present different risks today than what we've seen before, particularly on the confidence side. Right now, everything that we keep seeing in terms of confidence issues are related to Chinese people just deciding to save more money and not spend to the degree that we all thought they might with reopening, or they're deciding to pay down debt because they're saying they just can't find decent returns for their investments. The real risk right now is that that confidence issue spreads into the financial sector, and Chinese people start to say, I would just feel better not having my money at a trust company or in some other exotic investment product. I'd rather have my money in the banking sector or even in a state bank. If that happens, we are going to see more problems in companies like Zhongrong Trust and other entities that have issued investment products, because many of those companies survive on the ability to renew and refinance these products when they mature. But if we suddenly have Chinese people saying, no, we're getting a little more conservative, we'd rather put our money in bank deposits, that ability to refinance goes away. And Zhongrong explicitly said that the inability to issue new products in recent weeks was really what pushed them over the edge. And that's the real risk that we have here, I think.
You've talked about how we've seen trust companies have failed in the past. How does Zhongrong and Zhongzhi different this time around? And do you think that, as you say, maybe a trust fund is just around the corner? What could prevent that?
So they are much bigger than any of the companies that have failed so far. So we do have 6 trust companies that have failed over the last few years. It has not created systemic issues, clearly. So just because we have a single trust company under pressure does not mean the whole space needs to fall apart. But again, we're in a very different environment today than we have been. And on top of that, this is a much bigger company. And so the risk, again, I think, is that people just look at this and they see Zhongrong in the headlines and they say, I'm not so sure about keeping a lot of my money in trust investments. I'm not going to roll these products when they mature. And then we end up in a situation with a trust run effectively on that sector. Now, one thing I would highlight is people cannot just redeem their products at will in the way you can with a bank deposit at will, or even with bank WMP. So we will have to wait for these products to mature. So there is a little more space and time, and I suspect that's one reason why we're not seeing signs of contagion yet. But the risk, again, is that people just say they don't want to roll these exposures over.
Right, and I wanted to then tie into, the freedom of people to, put and remove money from the banks is certainly not as, it's not as, well, that's a lot more liberal than their ability to move money in and out of these trust products. And I guess my question there is, because you've covered the banks, do you see this actually benefiting the banking sector?
In a way, it could. I mean, we could certainly see a very large influx of money into deposits if we were to get into this very negative scenario. But it's not necessarily as positive for the banking system as it sounds, because we had a little mini version of a crisis in Q4 in bank WMPs. We had a lot of upward pressure on bond yields at that time, which were creating NAV losses in bank WMPs, and people were exiting the products and migrating into bank deposits. One of the reasons that the NIM pressure was so severe in Q1 is because all of this funding moved back into the banking sector, and the deposit costs went up a lot at the banks. So from a liquidity perspective, yes, to just have this huge infusion of funding would address any type of issues that a bank may have in terms of tight liquidity. But from a net interest margin perspective, it's not necessarily as beneficial as people would think. And we saw that early this year, late last year with the WMP situation.
Yeah, you mentioned about how the pressure that we're seeing when it comes to net interest margins. I'm just wondering then, do the banks have enough capital buffers then to sort of, I guess, offset the exposure that they do have?
all of the capital ratios, for the most part, for the major banks are all well above where the minimums are. But the reality is we are not really seeing banks acknowledge the extent of asset quality problems that exist in a whole host of sectors right now, but in particular property. The authorities had in place and just renewed a one-year forbearance period on property developer loans. So any developer loan that matures before the end of 2024 can be renewed for another year and does not need to be marked as delinquent. So this type of thing is preventing these losses from being acknowledged, and I think propping up bank net income and making things look better than they really are. Now, clearly the share prices have been under pressure for quite some time. The market understands this, and this is where I think not allowing these problems to manifest is not helpful. And this gets to the opening quote that you had at the beginning of this session, where maybe we need something to force a recognition of these losses so we can move beyond this place that we're stuck in right now.
Sorry, Charlene, I have a couple of more questions if you don't mind. Sorry. So, because you've opened up a few doors there. Stopping short of using the word bailout, someone needs to pay. In other words, if the banking system, if it's them, or in the case of LGFVs and the debt there, and what they're doing is they're transferring some of that onto provincial government balance sheets. So it needs to be recognized, for the lack of a better word, officially. Well, two questions there. Who then pays for it? I mean, does the central government then come in at some point in whatever form, number one? And number two is a rating downgrade at some point inevitable? And if it is, where along that debt ecosystem do you see that taking place? Sorry, that's a long question, but it's a fairly complicated subject.
In terms of the only balance sheet that really has a lot of capacity to take on any significant amount of losses, that is really the sovereign central government balance sheet, where we continue to have very low official debt to GDP figures. So that would presumably be what the authorities would have to draw on in a scenario where they would have to be acknowledging all of these losses. My view is we need to go through this process, but Beijing is very far away from believing they're at this point, and things are going to have to get very ugly before we get there. And that is not going to be a pleasant process going through that. In terms of a rating downgrade, I would think it has to be on the table at all of the major agencies, given the problems with growth and given the problems with the financial sector. I mean, we have seen people talk a lot about debt to GDP ratios and how much that's gone up, and it has gone up a lot. But nominal debt has gone up 8.5 times since 2008. GDP is only up 3.9 times. We just have not seen the economy keep pace with the accumulation of debt.
Charlene, sorry, we could talk all day about this, but we run out of time. Thank you so much, Charlene Chu, China Macro Financial Senior Analyst at Autonomous Research. Coming up, we got Foxhound founder Terry Guo toying with an independent bid for Taiwan's presidency. We'll take you to his unofficial campaign trail next.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst?
Do you think we're in a new phase for dividend policy overall?
That's a great question. I'm Francine Lacqua, and this is The Pulse. Every weekday at 9 a.m. only on Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Right, welcome back. Foxconn founder Terry Guo and Taiwanese President Tsai Ing-wen are in Kinmen Island here to commemorate 65 years since the second Taiwan Strait crisis. Now, Guo is toying with an independent bid for the presidency, but has yet to formally make an announcement. Our chief North Asia correspondent Stephen Angle exclusively caught up with Guo moments ago.
This is an important anniversary.
Right.
What does it mean to you?
Means, we want the peace. When I do talking the kids, the students, they come here to sightseeing, and then I ask him, you want a choice, war or choice of peace? Everybody choice of peace.
Do you think we're on a path towards war now?
From your point of view, we don't want. But I don't know. From your point of view, for Beijing point of view, you are different, the DC and the Beijing, they have the different agenda from different point to see, how Taiwan, yes, is important. But the Kinmen is connect with Taiwan and China.
Well, what do you think is best for the business community here in Taiwan?
Is from business point of view, we want the peace, and then we can grow our business and technologies. If you get a war, worldwide economy was huge damage. It suddenly will stop. If Taiwan semiconductor cannot ship, you can see how many impact for all the industry worldwide, okay, including car industries, right? Stop. And then, do you think that Taiwan manufacturers invest in China? Do you think they still can open a factory? No, stop. So you cannot ship any kind of product from China to anywhere.
All right, great work from our very own Stephen Angle there with, of course, the Foxconn founder, Terry Guo, in Kinmen, Taiwan. All right, obviously there's been another big story we're tracking, which is basically about Fukushima, right? So tomorrow is the scheduled date of the release of that water. I mean, obviously there's been a lot of questions if it's safe, the backlash that we've seen across the region. We've heard it from China last night as well. Extremely selfish and irresponsible for Japan to transfer the risks of nuclear contamination to the rest of humanity. Hong Kong also had a pretty harsh response too.
Yeah, they're essentially going to stop buying some of these products in the meantime, I think, in several of those categories. Here's a response. You can read about it, of course, on your screen. So let's just discuss this in more sort of detail as you look at some of the market reaction we're seeing so far here. Seafood stocks in Japan, you're seeing salt stocks in Hong Kong. Multifaceted and complex story here. We're down across some of these names here. Let's bring in Jill Deesis for us, who covers the economy, apparently also covers this, to talk about seafood for us here. So, but into context, so how much seafood do we import here in Hong Kong from Japan, and how are restaurants going to be affected?
Sure. So Japan, Hong Kong imports about $500 million worth of seafood products from Japan. That was at the end of 2022. I will point out, we're still trying to sort of parse how much of the seafood is actually affected, because Hong Kong's not banning all seafood products from Japan. It's just banning it from these 10 prefectures, although that does include Fukushima, but more importantly, Tokyo, which is, I understand it, and there's a sizable amount that's carried in from there. So yes, I mean, this does have the ability to impact quite a lot of the seafood that Hong Kong gets from Japan. It also, this ban includes not just seafood products, fresh frozen, but also sea salts, seaweeds. So there's a lot of different products that are really covered under this ban. We've just been talking to the restaurant associations. They're saying that there's actually a sizable amount of Japanese restaurants in Japan in Hong Kong that could be affected by this, or already actually starting to be affected by it, because apparently the sentiment around the release of this treated wastewater has already sort of picked up steam. We know this isn't an announcement that's coming out of nowhere. Japan has been talking about this for several months now. Yeah. So at this point, people in Hong Kong apparently are already getting a little bit wary about even going out to some Japanese restaurants. And so we are expecting them to take at least a bit of a hit to revenue, especially as they try to sort out where exactly they're going to be getting some of their products from now.
Yeah, like where I'm going to get my next sushi dinner. How much of this, Jill, is a political concern versus a legitimate public safety concern?
So Hong Kong and China are couching this under the terms of this being a big problem for public safety, public health. I will say, though, that a lot of this, it's really hard to escape the fact that a lot of this really is political. I mean, look, it's not like Japan is going and releasing a bunch of toxic sludge into the ocean, right? The International Atomic Energy Association, they spent 2 years reviewing Japan's treatment process for how they were releasing this treated wastewater. At this point, they're able to eliminate a lot of the radioactive elements that actually are still in this wastewater, to the point where it's just this one element called tritium that's still left within this treated wastewater that they're releasing. It's very difficult to sort of like distill that and remove it from here. But ultimately, I mean, there's a lot of nuclear plants all around the world that do the same type of treatment and release product. Japan is also sort of gated in terms of how much of this treated wastewater they can release into the ocean every year. We know that they're doing this over a period of several decades at this point. So yes, I mean, again, like we've got this major international agency saying that this is quite safe. So it's hard to escape the political element of the story.
And the science behind it, man, Jill, you really explained it so well there, certainly. Jill Deese, our China economy editor, talk a little bit more about the implications, public safety concerns, whether they're valid or not. Certainly we're going to be talking a lot more about this tomorrow. We're going to have our great team in Japan also talking about really just the whole process involved in really releasing this water. It's quite substantial.
Safe water, reportedly. Okay, we're not the scientists here. We're just reporters.
We're not. We're still learning too. Plenty more ahead. This is Bloomberg.
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
Check out these markets here. It's a mixed picture, but you're still seeing some pressure when it comes to onshore equities here this morning. CSI 300 lower by 0.7%. Earnings, though. A mixed reaction across the board, though. Antus, Ford's, Baidu were both a beat here. So certainly the AI story for Baidu lives on for another day. Kuaishou, though, despite being a beat, we're down about 2.5%. Sunny Optical, that was a miss, though. We're down close to 3% here this morning.
So a couple of earnings to tell you about going into today. So it's really heavy on financial. So China Construction Bank, China Life is coming out with earnings. Ping An Bank, coming out there as well. Really really we're paying attention to given the debt story, right? What do margins look like, number one? What are provisions going to be like, number two? In anticipation of bad debts, and maybe a recognition that at some point this will show up potentially on the books. We're now looking at fund flows right now. If we get it up, please, for our viewers to see. So we're 12 days of net selling going into this morning. We could see day 13, if not already, in fact. Day 13 seems to be well underway. That rightmost bar in your screen, that seems to be the outflow today. So we'll continue to track the story on the back of, I think, early signs of stabilization, at least, in this Chinese market. Everywhere else, though, across the region seems fairly okay so far.
Yeah. One of the movers I'm watching is also Country Garden. That's down to 4%. There's a lot of confusion of when this sort of grace period ends, right?
Yeah, 5 or 6.
5 or 6 of September. That stock, one of the biggest movers downside in Hong Kong today. This is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
This is Bloomberg.
10 o'clock in the morning here in Hong Kong, as well as in Singapore, 11 a.m. in Tokyo. This is Bloomberg Markets. I'm Rashad Salamat with Yvonne Mann and David Ingles.
Our top stories this morning, mixed trading across Asia as we await NVIDIA's results and Jay Powell at Jackson Hole. Chinese stocks failing to sustain Tuesday's bounce while the PBOC continues its battle to prop up the renminbi. Baidu among the gainers in Hong Kong after second quarter results beat expectations and with high hopes for its Ernie AI bot. Plus, a Bloomberg scoop, global chip makers warning that Huawei is building a secret factory network to skirt U.S. sanctions and boost China's tech ambitions.
Yep, welcome to the show. Hope you're all well. About 30 minutes into the cash market session on a Chinese mainland, so we're at session highs right now on the regional benchmark. We're coming off just ever so slightly on some of these benchmarks right now. There's a lot more green on your screens today than has been the norm this week, let's put it that way. A tenth of 1% to the upside. We're still trading though at 17,000 on the Hang Seng Index. Flip the boards, please. I think we have MSCI China coming up here on your screens, which tested the year's lows. That year low was about 58.05. There's a bid coming across the bond markets right now, but certainly when you look at some of these auctions in T-bills, for example, it does seem to suggest some of the weakness in demand is starting to filter through into the weekend of that. But essentially, guys, what we're seeing today is a reversal of the big moves across assets we've seen this week.
Yeah, I mean, look at the bonds. They're coming back at the moment. Treasury's a bit mixed. Again, it's waiting. I think NVIDIA's almost become a macro event, hasn't it? Because we're waiting for the numbers out later today. We're waiting for Jackson Hole. Bit of stasis right now. The Fed chair probably going to reinforce higher for longer rhetoric that he's had from before. And I guess that's something that people are already factoring. But don't forget that that Pulse story that we had the other day, which was 8% saying he could say something else.
I wonder. Now, who are they?
Was it Ben Emmons that said, is it Jay Powell or Jensen Huang that's fueling these rate expectations, just given that AI is all about productivity and improving and efficiency, the like here. But NVIDIA results, that's going to be quite telling, right? Where are we in this AI wave right now? Is there still sticking power, staying power right now? You certainly saw that in the Baidu results.
Yeah, I think we're coming off the record. I mean, we had the bit of a correction in that stock price a couple of days ago. And then you had the likes of just several brokers, including, I think, HSBC came out with a price target of something north of 800 bucks in the stock price. We're obviously far from that at the moment, but the expectations are high in terms of guidance here. The options market is actually telling you we could see a 10% one-day jump post-earnings. So it's going to be quite volatile around this time about 22 hours from now when that reports, I think after the market closes in the U.S. too.
Let's not forget the yuan and the fix again. Again, this battle taking place between market participants and, of course, the PBOC here, which is them trying to just prop up the currency here. Now, this sort of rate that we've got right now, and well, this sort of gap, if you like, the spot rate and what we're getting, that sort of gap we haven't actually seen since late 2022, and that then led to a big comeback by the yuan, as I guess also we had U.S. interest rates of that seen perhaps as a policy not being quite as aggressive as it had been. So, that sent the dollar down and the yuan came back. So are we at that inflection point? Are we also at an inflection point with the yen, as Mark Cranfield's suggesting?
Are we going to hear anything about the China slowdown at Jackson Hole? That's a really interesting question.
That would be a really dovish message.
And is that, as Nancy Davis from Quadratic Capital told us, is that going to be the excuse for the Fed to maybe say, look, we might be done hiking for a while, or we could be, holding for an extended period of time?
That could be the graceful exit here.
Yeah.
Stopping short of talking down the U.S. economy.
Right.
I guess in many ways, right? So, a couple of macro factors to watch. Obviously, we're looking at earnings as well on a day like today where there is a lull, as we were pointing out, and we're fairly mixed across assets right now.
It feels like August today. It hasn't done before, though.
Well, finally, after 23 days, feels like the summer. Volumes are quite light. We'll talk more about some of the individual earnings reactions a bit later on, like things like, I think, Anta Sports.
Yeah.
A couple of other companies as well coming out in China.
Baidu, Kuaishou.
Yeah. Australia's quite busy too.
Yeah.
Let's bring in Ben Powell. Why not? Our guest out of Singapore, Chief APAC Investment Strategist at BlackRock Investment Institute. Ben, on a quiet day like today, what is taking up your mind? What's taking up mind space?
Good morning. Well, I guess the two biggest economies in the world, the US into Jackson Hole. We find out 8 o'clock tomorrow morning, Hong Kong time,
by the way, the agenda. So we'll find out exactly what Powell and other speakers are going to be discussing. And then we get the actual Powell speech around 10 p.m. Friday night Hong Kong time. So I know I, for one, will have popcorn and be watching that closely. So clearly that's the focus, I guess, in the US over the next couple of days. And then in the world's second largest economy, in China, this focus on the property malaise, the confidence issues, the confidence problems. And for the moment, I think some confusion around why we haven't seen more policy support from Chinese authorities so far.
It sounds like your patience is running a bit thin on China, Ben. I mean, how do you trade this market and how do you look at it? Are there still sort of green shoots that you can look at?
I think it's important to understand why we haven't seen more support from China. And I go all the way back to late 2017 when President Xi launched a critical battle. He launched 3 critical battles, but one in particular against something like too much debt. Translations vary, but roughly too much debt. So you can think of China as still having what in the West they called an austerity mindset. That went away pretty quickly. But in China, I still think it's front and center of policy. The CCP fully understands they have too much debt. That creates a fragility at the heart of the economic nexus, which they don't want to pile more onto. So that's, I think, sort of, if you will, the philosophical reason why we haven't seen more support. And then the more practical reason is the growth target is only 5%. Of course, we're lapping very weak comps. China was in full lockdown until October of last year. So for most of 23, we're going to be lapping a very weak 22, which should make 5% achievable. But even that 5% is now getting called into question, which might give authorities a bit of a hurry up to do a bit more.
Well, you know, everybody's waiting, Ben, for stimulus and, you know, waiting for a bazooka of some form or the other. Maybe, you know, one could think about another way of looking at it. And maybe they could perhaps do something like the Resolution Trust Corporation that the US set up in the late 80s to deal with the savings and loans crisis. And that was something which really engendered confidence in the banking system. Ultimately, confidence is what this economy needs. And that is maybe a route to do it. I mean, also, you could also, if you remember, the toy hand as well in Germany during reunification. These sort of measures to perhaps lap up the bad loans, perhaps write some of these down, could be the answer ultimately.
Yeah, look, I think that's right. We the world, ran a very interesting experiment after the global financial crisis back in 2008 and beyond. How do you solve a debt problem? You can do it the American way, which is to inflate the asset side. That'll solve your balance sheet problems. Or the Europeans kind of tried to pay the debt back, which is harder. So both of those options are available. I do think authorities in China will be considering how they can move through this deleveraging. But to your point, Rich, confidence is absolutely key. Of course, in China, there's been a real focus on trying to make people treat property for living in, not for speculation, which is fine, but that doesn't change the reality. In China, as in most economies, property is absolutely central. It's most people in China, it's their only assets, it's the asset they borrow against. So this central position of property in the economic reality for China, as in any other country, is key. And I think it's confidence for home buyers, homeowners, property owners in China, which is a key macro issue, not just in China, but globally right now, so it appears to us.
Yeah, Ben, I mean, ultimately, though, I mean, China is a creditor nation. Let's not forget that. And, you know, if we look at household balance sheets, they've significantly improved since 2021. You know, this is coming against the problems in real estate. So one's got to ask us, you've got to get them spending that money. And it goes back to the confidence issue, does it not?
It really does. So a little bit of economics. We talk about the Keynesian precautionary motive for reasons people hoard cash. And we thought it was COVID, I guess, right? Over the last year or two, COVID, we saw, of course, incomes fell dramatically in China, so people saved more. That makes sense. But now, as we are clearly beyond COVID, at least as a kind of economic issue, we are still seeing this very pro-savings, risk-averse mindset and attitude from Chinese consumers and investors. And I think the key conundrum for Chinese authorities is how they can unleash the cash. The cash is there, but Chinese people are not only not spending it, they're actually hunkering down even more, reflecting this lack of confidence. Again, I think central to which is this decline in your property price. If your house price is going down, you feel less wealthy, maybe you are less wealthy, therefore you want to save more money, and they're stuck in that cycle for the short immediate term, it seems right now.
Ben, just to circle back to asset allocation, the question right now with yields back at 5%, we seem stuck at 5%. And I think the note out of, Bank of America recently, said, welcome to a 5% world. I'm paraphrasing that. Remind us, can you make money in the equity market when fixed income gives you 5-6%?
Yeah, I think so. Look, equities is a key asset in a world where inflation's higher. The focus we all need to have on making real returns is higher when inflation is eroding nominal gains. So I think real assets continue to be a very central part of the portfolio. That isn't just equities, it's other areas, infrastructure and so forth. But equities, I guess, is still the king or queen of real asset allocation. That's not going to change. Within our tactical calls, we're overweight emerging market equities at the moment, underweight DM. But don't miss the point. Underweight still means we own a lot of them within the balanced portfolio. So yes, equities, maybe not so broad brush. It isn't just long risk. We need to be a bit more specific, a bit more granular. Exactly what risks do we want exposure to? AI, for example. Do we want to have exposure to these kind of themes? So maybe the change now isn't so much are equities important in the portfolio. The answer to that is still very much yes. But it's how we invest in equities. Rather than just being long, we're all going to have to do a little bit more work and be a little bit more specific. Exactly what risk do we want in the portfolio? So being a bit more granular, we at BlackRock think is very important from here.
You're saying you're tilting your portfolios to areas where you don't see your economic view priced in. What assumptions are you making? Is it a soft landing, hard landing? And what areas? You mentioned AI, but other sort of plays there across the region that you look at?
Yeah, look, so we still think it's a landing, right? So it seems to me over the last several weeks, the market has sort of really emphasized a potential no landing scenario. And I think it'll be interesting to see what Powell says on Friday. We don't even know what he's going to be talking about, but it seems possible he will remind us that there is still a near total focus from the Fed on bringing inflation down. Sure, inflation's come down. That's great. It's important. But we're still nowhere near there in terms of reaching the target. And I think Powell will want to be clear on that, even if that comes at the cost of some economic consequences, as is quite likely. So we still think that you have a slowdown to come, which maybe isn't fully reflected in the earnings margin outlook from here. So we still think a landing is the most likely scenario over the next 6 to 12 months.
Ben, thank you so much. Great stuff. Ben Powell, their Chief APAC Investment Strategist at BlackRock Investment Institute. As we were having a conversation, just a brief look at markets right now. So across sectors, we mentioned it's a quiet day. Price, we're better off a little bit. Volumes are just non-existent. We're down about 40% in terms of volumes here across the region compared to this time of the day. So certainly there's not a lot of activity out there in these equity markets. Do we have the graphic on sector groups? I don't think we have it. I promise we'll get that to you in just a moment. Let's skip that now. Let's look at iron ore, please, if we can. Get that down. Anyway, there you go. Iron ore, that's the big story today. We're continuing to see that rally. Massive move up in iron ore in Dalian, 4.5%. That's now, 7 straight days. And that's filtering through, as you can see, these big miners over in Australia, Rish.
All right, let's get to what we've got coming up on Bloomberg Markets. We've got the PBOC not backing down in its battle with yuan bears, discussing those efforts to prop up the currency in the company of Nomura's global head of foreign exchange strategy. But first, a warning that Huawei may be building a shadow chip-making network to get around U.S. tech sanctions. We've got details on our scoop. That's on the way next. This is Bloomberg.
Okay, so you're moving in on me quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
Just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. Got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
From New York City.
In London, in Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
Well, the leading association of global chip companies has told Bloomberg that Huawei is building a secret chip-making network to help us skirt U.S. sanctions. Let's bring in Debbie Wu. She leads our North Asia tech coverage and joins us here in Hong Kong. Debbie, you helped break this story. What are you hearing?
So the Semiconductor Industry Association, a powerful chip industry group, told its members in April that Huawei is building a network of chip-making plants all across China. So it is acquiring 2 plants and then helping build 3 chip plants in Shenzhen. And what this means is with these chip factories, that means Huawei may be able to get around U.S. sanctions and finally secure some chip capacity. Because previously, after the United States blacklisted Huawei, it's lost access to production capacities at TSMC. And since Huawei didn't have its own chip plants, it couldn't really secure a chip from anywhere.
What's the Biden administration doing about this?
So actually, we don't know. I mean, we talked to Commerce, and the U.S. Department of Commerce said that they are watching this, and then they might take actions if it's necessary. So I guess we have to wait and see a little bit to see whether Commerce is going to do anything. But with Secretary of Commerce Gina Raimondo visiting China next week, I think this trip could get even more interesting.
Yeah.
Just to pivot, slight similarity, NVIDIA out with earnings as well.
So NVIDIA is going to announce earnings later today in the U.S. And I think investors will be keen to see what it says about the demand for AI chips in the second half as global economic uncertainties persist. At the same time, TSMC said in the last earnings call that there's some shortage of supply for packaging capacity for AI chips. So I think investors will be keen to hear what NVIDIA says about supplies.
Yeah. Can they fill the demand?
Yeah. That's it. And, NVIDIA, we're looking at these options you mentioned earlier. Thank you, Debbie, by the way. Debbie with our chip guru out of Taipei, of course. And we're looking here at these options for NVIDIA because we're suggesting a 10% implied move here with regards to that. As that company's out later on, there you go. Biggest options outstanding. We've got really this NVIDIA report to show if the artificial intelligence boom has any staying power, if you will. This should give investors an update on this spending that is going on at the moment, predicting that second quarter revenues may come in higher than even NVIDIA forecasted 3 months ago, and that was a blowout number at that stage as well. Quick look at some of these other companies making waves as well. Quick check on Kuaishou Tech. That at the moment is just up only fractionally at the moment. And there's strong momentum, though, according to analysts, expected to continue through the second half of the year. The company out with revenues for the second quarter ahead of the average analyst estimate. A quick word on Baidu there, 5.2% up. Well, the internet search engine reporting second quarter results are way ahead of expectations, with Ernie commercialization expected to bring in some incremental revenues and more. And indeed, this is something that we're looking at more closely now, David, are we not?
Yeah, with Zhiping Huang, who covers tech for us right now, what can you tell us about these earnings of Baidu?
Yeah, so for Baidu, it's quite positive. It beat on both revenue and profit. And crucially, its online marketing revenue increased 15%. That's one, because we have an easier comparison to last year when there was the lockdown. And second, when marketers look at their budgets, especially with a small budget because of macro uncertainty, they look at the search engines as something with more tangible results. That's why they stand out compared to other ad platforms.
They said something about Ernie Bot. We got a little bit of news. Still waiting for approval.
Oh, right. So we were kind of expecting a launch day, but the company won't give us one because CEO Robin Li said they're still waiting for Beijing's regulator to greenlight the large-scale rollout for their ChatGPT-like service. That could risk their first mover advantage because back in March, they first released it and then rivals tried to play the catch-up. If everyone has to wait, maybe rivals can fine-tune their products during this time period.
Yeah, what else has caught the eye there as well? I mean, what about just generally the business? What is it telling us about retail in China, perhaps, and e-commerce, if you will?
Oh, yeah. Actually, a less happy note comes from Baidu's cloud division. It grew 5% compared to 8% in the March quarter. That's because the company said after COVID, governments have yet to fully recover and start to deploy those physical cloud projects. That's a big question mark over its medium-term prospect.
All right, Zhiping, thank you for wrapping up those Baidu earnings for us. Of course, the shares are up 5% here this morning. On the back of those earnings, our tech reporter Zhiping Huang joining us here in Hong Kong. We got plenty more ahead. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Right, cannot wait for tomorrow. Guess what's happening? Japan has confirmed plans to discharge treated wastewater from the Fukushima nuclear plant into the ocean. That's starting as early as Thursday. Now, Hong Kong says it's banning seafood from parts of Japan in response. Avril Hong is in Singapore for us with more of, Avril, really how the market is reacting to the news here. What are we seeing?
We are seeing pretty interesting moves in seafood and salt-related stocks. And in Japan,
Some of these seafood companies are facing selling pressure, and this is little surprise because Hong Kong was the second largest importer of Japanese seafood last year, and the second only to mainland China. And the import curbs will actually hit a huge range of products from seafood to seaweed. So we're actually seeing these companies in Japan coming under pressure. But, you know, as they say, one man's meat is another man's poison, or seafood in this case. So South Korean seafood companies are actually surging in trade today. Analysts say that this comes amid expectations that Korean consumers might choose, hey, maybe I don't want to consume Japanese seafood, I'll stick to Korean seafood instead. And we're seeing those moves also in the salt-related companies. Some of them jumped by the double digits yesterday. We can just pull out that page for you, and I can show you the numbers here, because there was that expectation that we would see consumers actually stockpiling salt, that product, ahead of the discharge that's set for tomorrow, which, by the way, the IAEA says is safe, is in line with global safety standards. So we're seeing some of the unwinding of yesterday's trade, but nonetheless, very interesting moves on the back of that contentious plan by Japan.
Everyone, thanks very much indeed for that. And of course, that's, again, as we get that ban on some of these seafood products in China and here in Hong Kong as well, of course, perhaps another bit of foreign policy flexing taking place out of Beijing in some senses anyway. And talking of which, we've got the BRICS, and the old quip goes, do they have the mortar, though? And President Xi Jinping calling on South Africa to join in boosting countries' combined influence on international affairs. President Cyril Ramaphosa hosting him in Pretoria as the prelude to this week's BRICS summit. Jennifer Zabasaja reports from the capital.
The 15th annual BRICS Summit has officially kicked off in Johannesburg, but ahead of the summit's major events, South African President Cyril Ramaphosa hosted the only state visit that we're going to see this week with Chinese President Xi Jinping. And this is an important meeting for these two leaders and these two countries. It is the 25th anniversary of these countries celebrating their diplomatic relationship. And these two leaders are talking about how to enhance their trade relationships and expand collaboration and trade on a number of sectors, from mining to agriculture and textiles.
I am ready to make a joint effort with President Ramaphosa to take our comprehensive strategic partnership to new heights.
Now, for the rest of the week, these two leaders will be meeting on behalf of their roles as leaders of two of the 5 BRICS nations to talk about a number of agenda items, including potentially expansion, deepening trade with their own local currencies, and also enhancing their voice on multilateral stages and forums. In Pretoria, I'm Jennifer Zabasaja, Bloomberg News.
How much time?
There we go, and that BRICS summit taking place in South Africa. We've got a lot more, including a focus on currencies, on the way.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. You know, lots of testing, lots of thinking about what could go wrong, lots of research. You know, when I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd put like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
off the highs of the day, just as we head to the lunch break, 1/3 of 1% to the upside. We've got right now seafood shares are under a little bit of pressure amid these curbs coming out of Hong Kong and China on products there. Seeing the yen there just coming back a little bit against the dollar. Got to just say that there is the yield picture very much there with 10-year 0.67% the yield. But one thing to note that Mark Cranfield did earlier, and that is that the spread between 5 and 30-year JGB yields is 143 basis points, saying that that is the sort of zone which coincides with aggressive defense of the yen that we witnessed last year, and suggesting that this time around an alternative to yen intervention, he said, perhaps optimistically more than anything else, would be abandoning yield curve control. Anyway, they're off for lunch. We're on the way up equity-wise. We're also looking, of course, at the stiff defense by the PBOC to try to prop up the yuan here.
Yeah, intervention, in Japan, or we'll watch on Japan and China, obviously here, what we've been seeing, that stronger fix that we saw once again after we saw a record fix yesterday against consensus. And then you talk about offshore funding costs that are getting quite elevated. Nomura's Craig Chen had a pretty interesting call last week about the significant yuan weakness that he sees above 7.3 and likely to target 750 and beyond. I'm pleased to say Craig Chen joins us now to walk us through those moves. I mean, first of all, just maybe lay out your sort of thinking here of how we get to 750.
Sure. Look, I think firstly, 750 actually isn't that far from where we are here. We've obviously seen this depreciation pressure continuously through the past few months. I'd just simply say there are a lot of headwinds, and the headwinds are partly on the macro side. There's headwinds from the global side, where we see the long dollar carry trade remain pretty much intact as well. But I'd say locally, when we're analyzing some of the capital flow dynamics, it's very clear to us that there is significant weakness. The weakness is coming through equity outflows, foreign bond outflows, even corporates that are hoarding their dollars as well and not bringing back into China. So there's a lot of negativity that's continuing to brew. I do agree that, as you mentioned, there's a lot of measures being taken to try and limit the depreciation of currency. But you look historically at whenever we see these pressures come through, is China successful in using the current tool set that they have to actually stop depreciation? I think not. I think what we need is a fundamental change. Either China macro outlook is changed to more positivity via more stimulus, or we need the dollar backdrop to change. We need the long dollar carry trade to actually unwind. These only likely.
Right, and you don't see the toolkit, to your point, as being enough. In other words, what else should markets expect them to pull out of the hat to smoothen these moves, to your point, Craig?
Yeah, look, there's still other tools they can use. We have a whole list of historical tools that they have used before, from things like FX triple R cuts to penalizing FX forward positions. They have been utilizing the fixing. This is apparent conversations in the market. They've been using liquidity tightening measures as well to try and squeeze out, long dollar CNH positions in the market as well. So there's still things they can use and they can continuously use. But the point is that these are not trend changers, And the point as well I want to make is that if you really step up and you start thinking about controlling capital that's going in and out of China, this is another problem, because clearly it can create an environment where people actually get more and more concerned that we're going to be moving into a sharper depreciation period ahead. And that's exactly what you don't want to do. Right now, if you look at the market, volatility is relatively low. Capital outflows are negative, but they're not, significant. There's not this period of substantial, uncontrollable capital flight that we're seeing. So I guess with the macro weakness you're having, with if you want to say, the push to use a multi-pronged approach, you should allow the currency to weaken somewhat. And I think that's ultimately what will happen.
Right. Craig, just two questions, unrelated, but both on the currency. One is because you touched on outflows. Are you seeing any signs that Chinese consumers, the Chinese depositors are moving some of their FX outside China, to your point, on pressure? And the other thing is, you mentioned conversations in the market. Are you seeing any direct signs that state-owned banks are intervening directly in the FX market offshore?
Okay, so in terms of the movement of capital from the consumer side, or from the local side, if you wanted to say that, I would say there's probably a few things we monitor. One is from the corporate sector, and it's not so much the movement of capital out, but it's the lack of movement of capital in. Right, from the corporates, the hoarding of dollars. The data that we look at is showing that there has been a significant step up in the hoarding of dollars, and importers have been demanding more dollars than, if you want to say, normal times. So that's on the corporate sector. In terms of the other forms of capital flight that could come from, let's say, the retail sector, one thing that worries me, if I look at the statistics around, let's say, tourism and errors and omissions of the balance of payments, I simply say that you are seeing tourism outbound flows. It's probably around 20% of 2019 levels, very low. But if you look at tourism deficit, it's running at 70% of the pre-COVID levels, 2019 levels. So there's a big kind of mismatch. You're only seeing about 20% of the outbound tourism, but you're seeing 70% of the tourism deficit historically. That tells me that there's clearly some forms of capital flight that's happening. Yeah. And unfortunately, it looks like it's been monitored in the tourism account. In terms of the errors and omissions that people look at in terms of BOP, actually, you're not seeing too much from that side. But nonetheless, the tourism front, there is the capital flight that is picking up, and I expect to continue to pick up with now, tour groups being allowed to travel out of China. And
Greg, there's so many. I was going to ask you. There's just so many competing policy goals within China now, right? They're cutting rates, but they want to support the currency. They're supporting the banks, and they also want to boost lending. I'm just wondering, what is the most important to you right now?
So look, I think that there is a huge difficulty in terms of China, in terms of what they really can do. Of course, they want to support and ensure that the economy is running on full cylinders. But then, there is obviously a lot of problems that have been built up historically around debt. And of course, all concerns about bailing out certain sectors. So it's very difficult right now. That's why, the approach that we are seeing, and I think will continue, is that, as I said, it's going to be multi-pronged. There will be certainly stimulus coming out. There will be certainly measures to try and stabilize some of the stress points in the market as well. You can see, you hear about all these various small committees that are being set up to identify where the problems are in terms of, where it's credit-related risks. But this is what's going on. And I would say what's going to happen on the other front is rate cuts will continue. There is clearly, deflation in China, growth is weak, and FX will also, in my view, and it should be, another tool as well. There's no point, fighting this.
So, Craig, is this, in essence, this defense has been put up by the PBOC, managing and smoothing things, as to David's question earlier, things as the trajectory is for the RMB to head south, and that would be reflective of just what is really ultimately a sagging economy, and reflecting that and managing it, I suppose.
Exactly. I think that is the case. What I have noticed is that whenever we see the intervention or the perceived intervention actually pick up, it's actually times when we're starting to have a bit of position build up in the market, when renminbi looks like it might be moving on a kind of non-linear course of depreciation, and that's exactly when they come in. But I think ultimately, in terms of the exchange rate, given the macro backdrop, globally, locally, flow dynamics, it's quite clear to me that renminbi should be underperforming. If it's not against the dollar, because we have a surprise, let's say from Powell, this Friday, it's going to be against the basket. The thing is, you look at a trajectory on the CFETS basket, to me, it's clearly on the weakening side. And I would say that on the CFETS basket, just over the next, few months, we actually could see quite significant depreciation, maybe to the extent of 4% or even 5%.
Wow.
So, Craig, I mean, of course, how does this affect the rest of this part of the world? And tell me about whether dollar strength and the linear course it's taking can be altered by anything that Jay Powell says on Friday, and would he want to change it in the first place?
Yeah, so just like on Jay Powell, our view is that actually it may come out as slightly hawkish for the market. There is a few discussions about because they were talking about a discussion around the structural developments in the economy. That's the topic of Jackson Hole. I do think that there will be some discussion around R-star and the short run R-star, and effectively the neutral rate actually might be higher than what we've seen historically. That may be perceived as hawkish. That may see in terms of a shift in the Fed pricing, and we may see actually the dollar slightly stronger on the back of that. 2024 is pricing 100 basis points of cuts. I think the point is that maybe it shouldn't be pricing 100 basis points of cuts, that we can see a further repricing come through, and possibility of even the market thinking about a 40% probability of a hike in November should actually be higher. Bad news for Asia.
Craig,
bad news for dollar check.
Oh, well, that's great to hear. Thank you, sir, for stating that. We draw a direct line between where you are in real yields. We haven't been at 2% on the 10-year in tips in the U.S. and the strength of the dollar. Is that drawing of that line, that correlation between the two, something that we should be doing, or is the dollar strength down to something else?
Yeah, so it's interesting because we haven't really seen if you want to say the broad dollar, DXY actually move substantially higher despite this move up in nominal yields or real yields in the US. I think part of that's because of just the composition of DXY, right? It's primarily the euro.
It's the euro.
We haven't seen. Yeah, we haven't seen substantial weakness of the euro come through, and that's what's keeping DXY quite stable. But I think if you look outside of the euro, if you look at, for example, dollar yen, which is facing significant upside pressure because of the rise in US yields. If you're looking at Asia, same picture. Dollar Asia is the same picture as well. You're seeing this substantial upside pressure that's coming through in, if you want to say, kind of non-euro other FX in the world. So it is being reflected. The rise in real yields, the rise in nominal yields is being reflected in other currencies. It's just Europe. I think there's clearly other factors at play here, where there's discussions about whether the ECB actually should remain on a hiking path ahead. There's still some hikes priced in. Inflation in Europe is still notably high. And then, of course, if you're thinking about overall kind of terms of trade position in Europe, it's not too negative. It's actually been improving, and as well as the capital inflows.
Craig, very quickly, with the yen, can we move away from the yield curve control without too many ructions, or very, very quickly, actually?
So our view is it's not going to happen. We've seen the adjustment come through as well. It's going to be more a theme for 2024 when we see the final abandonment of YCC. I think the point is that the inflation momentum in Japan should be easing off. This is a projection the BOJ have. Is a projection that Nomura also has, and that'll be something that will, I guess, ease off the pressure of a further shift in Japan YCC or away from YCC.
Craig, fantastic. Let's do this again, and hopefully before 2024, when the complete abandonment that you just pointed out there takes place in Japan. Craig Chan, the global head FX strategy at Nomura. Just ahead here, a closer look at the worsening property crisis on the Chinese mainland as risk spread to other sectors and hampers the economic recovery. This is Bloomberg.
San Francisco, our expert hosts of the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions.
You're back with Bloomberg Markets. Trust companies in China are under increasing pressure as the fallout from the country's property crisis spreads to the financial industry. Charlene Chu, senior China macro-financial analyst at Autonomous Research, telling us that a run on the sector perhaps could be just around the corner.
The real risk right now is that that confidence issue spreads into the financial sector, and Chinese people start to say, I would just feel better not having my money at a trust company or in some other exotic investment product. I'd rather have my money in the banking sector or even in a state bank. If that happens, we are going to see more problems in companies like Zhongrong Trust and other entities that have issued investment products, because many of those companies survive on the ability to renew and refinance these products when they mature. But if we suddenly have Chinese people saying, no, we're getting a little more conservative, we'd rather put our money in bank deposits, that ability to refinance goes away. And Zhongrong explicitly said that the inability to issue new products in recent weeks was really what pushed them over the edge. And that's the real risk that we have here, I think.
You've talked about how we've seen trust companies have failed in the past. How does Zhongrong and Zhongzhi different this time around? And do you think that, as you say, maybe a trust run is just around the corner? What could prevent that?
So they are much bigger than any of the companies that have failed so far. So we do have 6 trust companies that have failed over the last few years. It has not created systemic issues, clearly. So just because we have a single trust company under pressure does not mean the whole space needs to fall apart. But again, we're in a very different environment today than we have been. And on top of that, this is a much bigger company. And so the risk, again, I think, is that people just look at this and they see Zhongrong in the headlines and they say, I'm not so sure about keeping a lot of my money in trust investments. I'm not going to roll these products when they mature. And then we end up in a situation with a trust run effectively on that sector.
There we go. Charlene Chu, previously of Fitch, now, of course, with Autonomous Research. We'll continue that conversation, in fact, right now, because the risks from this debt crisis spreading partly into the property crisis. You have the developer, of course, Country Garden, slipping towards a potential default. The markets are still grappling and debating what date that actually is, September 5th or 6th. That's a separate story. Our Bloomberg Opinion columnist, Julie Ren, argues that China does need some sort of Lehman-like scare to talk us through this. Tell us why, Julie.
Well, I mean, what China does so far is just pretend, extend, and carry on as if nothing happened, right? And the problem is there is just so much moral hazard in the system. Let me just give an example. Local government financing vehicles. Their debt, by IMF estimates, is about 50% of China's GDP. China actually tried to diffuse the LGF debt before, a decade ago, in 2014. They basically said, okay, I'm going to swap out 2/3 of your debt and we can start over again. And now LGF debt is bigger than ever because banks and asset managers, they just can't have enough of a Beijing put.
Yeah, this is it, though. I mean, you've got all that. You've got politics here, obviously playing out too. And, this brings you just to think, do they need also something like a bad bank to put all this into, if you will, and have a bad bank vehicle as well, perhaps, and, as you say, start again. But, politics are central here too.
Yes, absolutely. And China had bad banks. Huarong was a bad bank, right? And then then in the end, Huarong's chairman Lai Xiaoming, he got executed because he was doing very bad things himself. So a lot of it is like what you said, politics. And I think there is so much paralysis in the government, and the incentives just are not aligned properly. President Xi Jinping kept on saying, okay, you cannot continue on with those big projects. But local government officials said, okay, my region's GDP will be better than anyone else's. That gives me a promotion, right?
We were talking to Charlene Chu about whether there is that contagion risk, and she says, look, I look at certain things, I don't see anything that's sounding alarm bells right now. But is there anything to suggest that maybe right now we're already in sort of a Lehman Brothers moment in China?
I don't see it. I mean, like, to be honest, with this kind of problems, the property, the local financing debt problems, in the U.S., there will be a Lehman Brothers moment already. But the thing is, Chinese banks work differently. Like, say, U.S. banks, we have a lot of worries about U.S. banks. They are selling off commercial real estate loans, and then they basically writing down all these loans, right? But in China, everyone was cooperating and say, let's not fire sale anything. We'll just continue on, and we're still trading at book value. I mean, Chinese banking system's non-performing ratio is only 1.6%. How's that possible?
Well, indeed, that is the question. Julie, always thought-provoking. Thank you so much. Bloomberg opinion columnist Julie Ren there. Just take a look at what's happening across. We do have banking earnings coming out as well. We've got the ones that are going to come up now, hopefully. Do we have them?
China Construction Bank,
exactly.
Ping An Bank,
China Life.
All
there you have
today.
ICBC, CITIC as well, and those are all coming up in the next few days, and today as well. Right, that to look forward to. This is Bloomberg.
Next. Fed was going to keep rate World Cup. This is a three.
As the economic picture down.
The BOK is getting ready to make a decision.
Nothing happening, which is, I guess, in some ways a good thing following the declines we've seen recently. Although the CSI 300 has resumed somewhat some price pressures right now. There are a couple of names we'll get to a bit later on. Things like Yunnan Energy is in focus today. Southeast Asia, slightly higher there on the Straits Times Index. Flip the boards, please, if we can. So we're looking ahead to, I think, when the yuan conversation takes you into HIBOR rates in the next hour, and this is what we saw yesterday. Do we see day two? That's another thing, right? But this is this funding squeezing out the shorts, as they say.
Yeah, we'll see, right? I think some of these are about 7-year highs.
Yeah.
So, continue to see more pressure, I guess, against those who want to short this currency. But as Craig Chen from Nomura said, those are not sort of trendsetters, he says. Dollar China, this
Stop
trend.
gaps only.
Yeah. So certainly that's one to watch. And of course, Thailand markets open up. Everyone's going to be watching out for.
We've got a prime minister, haven't we?
Finally a prime minister.
And just in the
and
last
a familiar
hour,
face.
Yeah, and in the last hour, the king has said he's going to essentially meet him at 6 o'clock and announce him as Prime Minister. And of course, Thaksin Shinawatra as well, going to hospital meanwhile.
Yeah, but it is Shrestha Thavisin that is probably going to provide some more stability into this market. Now we got some clarity of who is going to be leading the country. We saw, he used to be the CEO, I think, or chairman of Sensiri. That stock was flying yesterday.
Yeah, I wonder why.
So we'll see how that all plays out. We got plenty more to come. Stay with us. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
Cornhole's one of the only sports in the world in which you can have male and female players playing at the highest level against one another.
I'm Jason Kelly, a business journalist and sports fan with a couple decades covering Wall Street.
Getting involved from a business perspective was something that was very natural and easy transition for me.
I'm Vanessa Perdomo, a former college athlete and journalist working across media.
Let's do it.
All right, you ready?
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
I got a point!
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly with just a couple people. Our average restaurant now does about over $1 million per restaurant in digital sales.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
almost 11 a.m. in Singapore and Shanghai. Welcome to Bloomberg Markets Asia. I'm Haslinda Amin.
I'm Rashad Salamat in Hong Kong. Let's have a look at our top stories. Good Asian equities pushing higher. Traders are waiting Nvidia's results and waiting on Jay Powell's speech at Jackson Hole. The PBOC continuing its battle also to prop up the yuan. The Philippine economy is losing some of its luster after growth last quarter fell shy. Going to discuss the outlook exclusively with the country's finance secretary, Benjamin Jokno. And global rice supplies facing a new threat as India considers tighter export restrictions to tame domestic food inflation.
Jackson Hole, front and center stocks, pretty steady, but when it comes to the bond market, jittery. Investors expecting higher for longer, perhaps a hawkish Fed when Powell speaks on Friday. That is the one to watch. Take a look where we are in terms of the equity markets. A mixed picture. TAIEX being lifted up 0.8%. ASX also in positive territory. CSI 300 though, it is in negative territory, currently down by 0.8%, trading at session lows. And not surprising, we've been getting bad news of the bad news out of China. Property market, shadow banking, all under a lot of pressure. Interesting to note that Chinese stocks trading in Hong Kong are trading at a huge discount, the biggest discount since November. So there is disparity in terms of Chinese stocks trading in Hong Kong as well as the mainland. In the FX space, well, the dollar taking a breather in negative territory, giving a lift to Asian currencies. The baht getting a lift up 0.3%. Of course, they have a new prime minister. The Aussie dollar getting a lift from the upside in commodities, and the Sing dollar pretty steady at 13.56 right now. In commodity space, well, green pretty much across the board. Iron ore up about 2%. Of course, the worry there is about demand from China in positive territory today, but demand in China lackluster. Bond market, of course, treasuries in Asia pretty steady at this point in time, though bear in mind, two-year yield still above 5%. Rish.
Yep, getting to the Thai market open, of course, the market there, the set was the best performing benchmark in Asia for the session there on Tuesday, adding to those gains today, up 0.5% at the start of the day. The baht's also been coming back of late too against the dollar. Last 4 days has seen it depreciate by about 1.4%. Again, gains there as well. There's confidence coming through. It's down to finally a 3-month political impasse being sorted, and this is after the May the 14th election that really did challenge the establishment there. New Prime Minister, you can have a look at him in a second. It's someone who has the support of some of the forces aligned with the king. There we go, that was him as he managed to cobble together this coalition. Shreta Thavisin, a former property tycoon, becoming the first new leader to take charge of Thailand since 2014, the first new leader since then. And the Thai king will be endorsing him as the kingdom's 30th prime minister. The official announcement stated for later today, scheduled to receive apparently the new prime minister at Pheu Thai party headquarters there as well. That the royal endorsement is meant to be presented at that stage. So that is a look at what's going on there. India, quick check on that. We have the prospects of the trading day there also a bit on the flat side, but overall we're looking at some of the earnings out there as well, very much in focus. So there we go. And from Thailand to the Philippines now, Haslinda.
That's right. It does seem like Philippine assets are under pressure. Take a look where we are in terms of the peso. This is a currency that's gone from one of the best performers in Asia to one of the worst performers in terms of the PCOM, currently under pressure, down 0.3%, bucking the trend here in Asia. The Philippine peso, 56.47 now. Let's stay with the Philippines, get more on the outlook for Philippines with Philippine Finance Secretary Benjamin Jokno, who joins us exclusively from the sidelines of the ASEAN Central Bank Governors and Finance Ministers meeting happening in Jakarta. Secretary, good to have you with us. Front and center, of course, Jackson Hole, whether or not there'll be any indication from the
a.m. Eastern, right here on Bloomberg, your global business authority.
DOJ or other authorities
could face bigger challenges next.
Fed was going to keep rate welcome. This is a three.
As the economic picture down.
To be okay, is getting ready to make a decision.
This week, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Coverage starts Wednesday, August 23rd with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
A mixed picture for Asian equities this morning after Wall Street's risk-on mood faded following the big tech rally. Shares are lower in China. Traders see plenty of room for its currency to fall further. Meanwhile, investors are awaiting key results from NVIDIA and Fed Chair Jerome Powell's speech in Jackson Hole on Friday. I want to get out to Eugenia Victorio, head of Asia strategy at SEB. Eugenia, I take you straight to the real yield chart that shows the highest level since 2009 for the 10-year part of this equation. I begin to wonder whether this yield jump could start causing the recession that few now fear. How big a talking point is that going to be at Jackson Hole?
Well, clearly the changes in the 10-year yield has been quite dramatic in the last month alone. But looking at the daily changes of the 10-year yield, it's showing signs of topish. And I would hope that it would, if it were to go up, I think it would only go up to around 4.5%, as long as there are no changes to the Fed rate expectations from here.
I suppose then the question, good morning to you, Jenna, welcome to the show. I suppose the question then becomes is how high and enduring is the regime of this rate spike? Bill Dudley wrote an op-ed for us. He said, goodbye to the bull market for U.S. Treasuries. We have a paradigm shift. Higher yields are back. And he suspects that the bull market that began in the early 1980s is over. Do you agree? Are we firmly reasserting ourselves to the 4s and 5s in yields? Is there a regime shift in the bond market?
Well, it really depends on where the inflation is. If you believe that the inflation will not go down to 2%, then there's the real possibility that the 10-year yield will remain in current levels. However, even as we speak, there are still expectations that the Fed will eventually cut rates in 2024. So it does not make sense that the 2-year yield will go down and then the 10-year yield will stay where it is right now. Having said that, the timing of the expectations of the Fed rate cut is getting pushed back almost every day. So at this point, I would say the first cut would likely be in Q2, but the moment you have a pivot from the Fed, it is quite likely that the 10-year yield will follow as well.
Eugenia, you spent a considerable amount of time in your research note looking at the China dynamics, and specifically as it relates to its foreign exchange. The Markets Live team has been doing some analysis, and they argue that the intraday high of last October could pretty much be the peak for weakness in the China yuan. Do you subscribe to that, and what do you see policymakers responding with in the coming days?
As long as the U.S. 10-year yield remains at above 4.30, there is reason to believe that the dollar CNH would remain at around current levels of around 7.30. However, if the 10-year yield were to rise to around 4.5%, then no matter what the PBOC does, there is an upward pressure to dollar CNH. But the PBOC can slow down that move, and that is exactly what we are seeing these days, especially with the recent squeeze in the offshore market in the last few days.
One narrative that is building is the PBOC has responded with incremental policy responses, and we're going to need something much more dramatic in the MLF. 100, 150 basis points can't. We maybe had one guest yesterday talking about the need for helicopter money in China. How much more significant a response mechanism do you need from monetary policy and fiscal policy in China to steady the ship?
At this point, the monetary policy easing seems to not be working as much because we've already been seeing consecutive cuts in the different policy rates, as well as further injection of liquidity in the market. And even then, credit growth in China has barely budged. And at this point, we really need fiscal policy to step up to the plate. But Beijing has made it clear they're not going to deliver, at least not yet. They're trying to see how much more pain the market can take before they actually step in, if they will even step in. In my view, the likelihood of helicopter money or further aggressive fiscal policy is not in the cards at this point.
The big global equities event is going to be the set of NVIDIA earnings, and that is likely going to have a major impact across Asian stocks as well. What are you telling clients about positioning ahead of that?
Well, clearly the Asian stock market is really very much determined by the general risk on sentiment. And as long as China is having a bit of a cold, it is very difficult to see that the Asian equity market would be able to rally even with the rise in tech sectors. We've seen some upside in the Korean tech equity names, but that's going to be limited as long as the general export picture of the region is not picking up.
Okay, let's see what the policy responses are. And of course, all eyes down on Jackson Hole and NVIDIA. I don't know which one I'm more concerned about. Eugenia Victoriano, head of Asia strategy over at SEB. Our guest this morning on Global Markets, right here on Daybreak Middle East and Africa. Good morning.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance. Our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
What we see from the announcement today is that rather than Microsoft being able to control how those cloud streaming rights are used, that control will shift to an independent company, and Ubisoft will be able, for example, to enter into all sorts of licensing deals with other cloud streaming providers, supporting importantly different kinds of business models, for example, multi-grain subscription services, or enabling cloud service providers to offer their content over a non-Windows operating system. So we will be testing carefully whether that does deliver on keeping that market open to competition, supporting innovation and choice.
Sarah Cardell there from the UK's Competition and Markets Authority speaking as Microsoft's planned $69 billion takeover of Activision Blizzard got a new chance of winning approval. The US tech giant has submitted a substantially different deal, one which would give the French video game publisher Ubisoft cloud streaming rights for Activision games, potentially easing concerns around the monopolizing the fast-growing market. So that's a big move yesterday. Ubisoft ramped higher yesterday, Yusuf.
Yeah, just short of 92 a share. But in the meantime, the CEO of Kane Anderson Real Estate Advisors says that markets are in for a rough road ahead. Albert Rabel told us exclusively that he believes that the U.S. economy will experience a hard landing and that the Fed has already gone too far.
I'm still in the hard landing camp. I know we sort of have consensus around soft landing at this point, but I think the reality is that we've already landed. Core inflation is down to 3% plus. Core inflation minus shelter is down to 1%. So the reality, in my view, is that we've already landed and that the Fed will do what it has historically done, which is wait too late to get started and then go too far. And I believe that they've already gone too far. Now we'll see what Mr. Powell says on Friday. We'll see what happens in September, but we've got $17 million of household debt. We've got trillion.
That's a lot.
17 trillion of household debt, 12 trillion of mortgage debt, 1.6 trillion of auto debt, $1 trillion plus of student debt, which, as we know, is going to have to start actually paying on that debt sometime soon. So we're a consumer-driven economy. I think we're in for a rough road ahead.
Speaking of the rough road ahead, you look at the 2-year, over at 504 nearly today, and you look at a 433 handle on the 10-year, and you think about the trajectory of rates and what else has to break as rates stay this elevated. Where has the market not yet seen pain that you expect?
Well, you were talking about the regional banking downgrade. I mean, we're very close to that. We've got a big real estate debt business and a big real estate equity business. On the debt side, we've got $1.5 trillion of maturities coming in the next 18 months. Obviously, that's going to be difficult to do in an illiquid environment. Regional banks are a big provider of capital, or historically have been. Now private credit is coming in, private equity is coming in and filling some of that gap. But the reality is there is a lot of mortgage debt that has to be refinanced, and those rates are a lot higher. And I can tell you that a lot of those Excel spreadsheets just don't work.
Well, what about the default rates here? Because you have seen a few defaults start to hit the market, but nothing so crazy yet. Do you expect that there's going to be significant distress? And frankly, you've made your name in some of this real estate distress. At what point do you find assets that are cheap enough to buy?
Well, it's true. I say I've lived through 88, 98, 08, and the pandemic, and so I've been through a number of different crises. I don't see capitulation yet. It is a lagging indicator. I mean, the issue is that you've got a 12-month lag on shelter really being factored into the inflationary dynamics. So, I think we're going to see capitulation and prices that are interesting, and private credit and real estate credit get very interesting from a buyer perspective later this year and into the first half of next year.
A whiff of that capitulation could certainly unseat global risk. Kane Anderson there, Real Estate Advisors CEO and Managing Director over at Albert Rabel. So they're nervous and sweaty in the bond market globally, but nowhere more so than in the JGB. You're now seeing Japanese government bond rates hit levels that we haven't seen since 2014, both at the 10s and indeed in the longer area. What does that mean for the Bank of Japan? They've come in twice, Yusuf, and intervened to cap rates when we've been around this 0.66%. The yen is strengthening this morning at one juncture, up 0.2%. So you are just looking at a nervous set of bond traders all the way around. Whilst you're away, we made a 15-year high globally on rates. You got the highest since 2007 in the US, and real rates are the highest since 2009, and that suggests maybe that gives the Fed the room to pause. Right now, pressure in rates in Japan.
Yeah, quite a bit of anxiety coming from the higher global bond yields. You kind of wonder what's going to break next. I want to switch over to Middle East equity markets, get you a bit of a sense of how trading went underway. So for the Saudis, the Dow was down 0.3%, but underneath the index was weakness in food and beverages, down 2.5%. A little bit of upside in Dubai, up 0.2%. The big move came through from Egypt in the region, though, with Eastern Tobacco in the news. The holding company for chemical industries receiving an offer from foreign investors to buy up to 30% of the 51% stake in Eastern Company. The government is looking to sell stakes in over 24 state-held entities. Remember, the stock up 8.5%. Much more ahead. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Bloomberg Daybreak, Middle East and Africa. Our top stories this morning.
Mixed trading as we await NVIDIA's results and Jay Powell's Jackson Hole. Elevated bond yields continue to cause concern as foreign investors ditch short-dated treasuries.
Meanwhile, Chinese stocks fail to sustain Tuesday's bounce while the PBOC continues its battle to prop up the yuan. Wall Street still sees plenty of room for the Chinese currency to fall.
Goldman Sachs steps up the pressure on staff to return to the office full-time. Frustration grows at the reluctance of some workers to come back in.
And Iran plans to keep raising oil production as backdoor diplomatic efforts with the U.S. appear to be easing pressure on the Middle Eastern nation.
What are you more nervous about, the NVIDIA results? We're seeing chip stocks up 39% so far this year on the Philly Stocks Index. And yet at the same time, we're waiting to hear some kind of clarity from Jay Powell. We've come off the lows this morning. We're back in the green across the equity market space. But I give you some attention to that diktat. 1987 was the year the differential between bond yields and equities rising. Looks like that's been interrupted. We've got the NASDAQ down 5% in August. SPUs are down 4.4%. Is it a rerun of where finally higher real rates begin to impinge on a pro-risk stance? Have a look at this. What's going on under the belly? Nike having a rough time in China. They've got stock inventory building there. $13 billion has been wiped off the stock in the past 8-9 sessions. We're on a record losing streak in China. Charles Schwab down 5%. They're going to cut jobs, we understand. They're going to restructure, down 5%. Macy's, this is the malevolent force that you need to really pay attention to. Credit card delinquencies at Macy's are the underbelly of what took that stock down by 14%. The reality is stimulus checks are finished. Interest rates are now at 5.25%. Mortgage rates are at 7%. The cracks and the fissures begin to be delivered.
Yeah, in the meantime, I'm looking at the bond markets where we're seeing a little bit of consolidation after the historic moves in yields on Monday to levels that we haven't seen in about 16 years. The note that caught my eye was from TD Securities, and they're talking about a pain trade, specifically from two-year yields, currently at 5.04%. A lot of these securities is what some of the big banks and a lot of financials hold as assets on their balance sheets. And if you just track unrealized held to maturity and available for sale losses at banks, the pressure is on. And then also, what if China starts selling U.S. treasuries more aggressively to fund its currency intervention? Are U.S. yields going to rise further? Well, he's been looking into some of this. He wrote a commentary for Bloomberg, and he says basically goodbye to the bull market for U.S. Treasury bonds. Total return has already been negative since 2021. You can look at this chart. Year to date, we're down about -1%. The larger deficits are going to push up R-star and add to the bond premium by increasing the risk of long-term lending to the U.S. government. The bond term premium has been the hardest part to forecast. Before the 2008 financial crisis, it was about 100 basis points, and since then it's been around zero, largely because there was little risk, right? Bonds were viewed as a good hedge against a recession. That paradigm is over. It shifted. Higher yields are back, Manus.
They are indeed. Let's see how Asia is grappling with a currency fixing for the PBOC, which was a little bit less than the market had anticipated. Avril Hong is in Singapore. Take it away.
Well, Manus, we are looking still this hour at the way the Chinese currency is faring because dollar yuan has moved past 730. So there are some signs that the currency is stabilizing. And our colleagues at MLive actually point out that we are potentially seeing that peak in the weakness in the Chinese currency because these risks about the Chinese economy might have already been priced in. Certainly, though, the debate rages on because despite Chinese authorities' efforts to kind of support the currency and to stem the fall, we saw in the past day that as soon as New York and Europe started trading, that slide resumed. So that's one to watch. Stock markets also underscoring the concerns continuing about the property sector. Let's take a look at some of the bright spots, though, because the internet sector is doing well in China. Baidu, Kuaishou among the names that are rising in trade after they beat market expectations on earnings. So fresh signs of that earnings recovery. The rest of the Asia Pacific keeping a close watch on the Nvidia earnings as well as higher yields. And they're also keeping a close watch on what China's economic trajectory looks like, guys.
Avril, thank you for the updates. That's Avril Hong there. I want to get back to the narrative that foreign investors are ditching short-term dated U.S. securities and Treasury specifically, keeping the pressure on yields to climb higher. Comes ahead of the key Jackson Hole meeting, which gets underway tomorrow. Let's get to the regional implications with Arti Chandrasekharan, Director of Investments at Shua Asset Management. Arti, I mean, you've come up with a tactical playbook as we count down to Jackson Hole and sort of the regional nuance to it as well.
So we are still overweight on investment grade names as far as our fixed income portfolio is concerned. High yields have done exceptionally well year to date, surprisingly enough as well. We have seen spreads actually widen a bit in the last couple of days, but not enough for us to take positions back. So yeah, we're just sticking on to our playbook, which is basically play it safe, keep safe bets. A recession is around the corner. It's not about if it will happen, it's more a when story. So,
I like your line where it's duration is hard to resist, and this is the basis, isn't it? Whether you step in now at 4 1/3, or whether you believe that we're actually going into a world that Dudley has said, but you know, William Dudley said you're looking at 4.5% and a new higher regime. So do you load up? I mean, what was it Bob Michael said the other day? He said you buy every dip. Are you of that narrative in duration?
It's hard to be neutral on duration when your real yields are at 2% positive. I mean, the more stronger the data is going to come out of US, the more aggressive Fed is going to be in tightening rates, and that actually increases your story on hard landing. So I think what is more important, Manus, is how the end game is going to play out. We don't know the path to end game, which is very murky and unclear.
Yep.
But the end game is going to be like 10 years would be lower than what it is currently, and that's what we're playing at.
In terms of some of the political developments, we're closely following the trip of the Saudi foreign minister to the BRICS summit. There's been a lot of speculation about new members, Saudi Arabia or others from the region. How much of a game changer do you think that would be?
I think it's definitely very positive. From an economic perspective, if Saudi gets included, it gives access to new markets, new people, new business opportunities, and they're trying very hard to diversify their revenue from oil. So it's going to be super positive there. And also on the energy market, it adds a very new dynamic to the global energy market. Think of it this way: you have a strong alignment of the most powerful world producers and world's powerful, prominent consumers, India and China, all in the same on the podium. It kind of gives you a very strong influence. They can influence the global trade, in my view.
Where they have got mega influences, of course, in the Treasury pod in the US, and this is something that we covered last week, is the steady incremental sell-off by Saudi Arabia. I didn't realize this. Since 2020, they have reduced their holdings by 41%. I mean, this is staggering. It's only when you actually look at the data and look at the chart you begin to understand. Is that a transformation story? Is that a reallocation of resource story? Is that a DUS story?
I would not read too much in between the lines, but I think it's more reallocation of resource story. They probably have better opportunities elsewhere. As we know that Saudi is more about Vision 2030, the Expo 2030 decision that's going to play out in November. So they have a lot more investments, giga projects that's coming their way. So I think why not? I mean, it's definitely something which I think is they're doing in the right way.
I mean, it's been a sacred relationship, right? Because they would sell the oil, and then with the oil money, they would reinvest it into U.S. Treasury. So as much as it might be a reallocation of resources story, there is a relationship that is tied to that. But in terms of the oil underpinnings to begin with, in terms of supply and demand, because we've been talking about the Iran story throughout the morning, about them ramping up. Does that move the needle for you in terms of the equilibrium in crude oil?
I think we're constructive in the near term as far as the oil prices are concerned, mainly because there is a lot of pricing power by the OPEC, which is playing a significant role. And as long as that is there, I think oil is going to be positive. The headwinds for oil is obviously the U.S. recession fear kicking in, Chinese demand getting weaker than expected, and more importantly, Saudi rolling back the cuts, which they eventually, I think they will do it in maybe a quarter or maybe in a couple of months. So those things could be detrimental to oil prices.
Okay, well, they're certainly in there with a million barrels a day of unilateral cuts, which has underpinned the market thus far. Arti, thank you very much. Arti Chandrasekaran, the Director of Investments over at Shua Asset Management. Plenty more ahead this morning on Daybreak Middle East and Africa, right here on Bloomberg.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers Jobs Day like Bloomberg.
Artificial intelligence has been a hot topic this year, fueling a rally in the share prices of many companies involved in the technology, as well as the fears about it replacing people's jobs. But through harnessing the power of data, AI can also help businesses and governments become more environmentally friendly. And IBM has software and solutions for exactly that. I caught up with Christina Shim, the global head of product strategy for IBM Sustainability Software, about just that and the work they're doing.
So our Watson X platform is our main AI foundation that is allowing for this gathering of data to make sense of the data with analytics and to actually action on that. So that's one piece. But ChatGPT is something that really pushed and catapulted AI into the forefront of everyone's vocabulary and mind. And to be honest, AI is something that we've been working on for a while now, right? Our strategy for many years has been around hybrid cloud and AI. And so what we are doing is, in addition to what we're thinking about on the large language model front, which is where ChatGPT comes in, we're also thinking about it more broadly in terms of foundation models. So one of the areas, and we're seeing it all around us right now in terms of extreme weather and what the climate change is actually what we're seeing in terms of the ramifications of that. So one of the things that we're doing is working with NASA, and we're using foundation models to take all of their geospatial data that's relevant and actually create models around that can help with understanding kind of the physical climate risk that everybody is facing today. So you take an agribusiness and what that means for their operations. You take a global retail company or their supply chain and what it means in terms of the raw materials that they're sourcing from and how they may have to think about their future business operations. You think about what's going on right now in terms of droughts and wildfires and how a lot of this could be leveraged for real-time or ideally proactive actions in order to address how they are affecting your business operations and the people in the community as part of that. So yes, absolutely, there's a lot of investment happening, but there's also things that have been going on for many, many years.
I mean, you mentioned the wildfires. The images are very, very potent in Greece. There's evacuations from various islands. Yes. So that point is very, very real. Do you think that we are in the foothills of understanding where, for example, IBM and NASA can bring that intellect, that technology intellect to bear on climate issues and warning signs, delivering warning signs for us to understand what's coming?
Yeah, absolutely. I think it's a combination of what can you do proactively to understand what's coming, and then what can you do reactively in order to address what's happening right now. So it's a combination of both, and both are equally important, right? We can't just think about what's happening in the future without also addressing what's happening real time in people's lives and to businesses today. In addition, we also have to think about, this is only going to get worse, most likely, before it gets better. And so how do we make sure that in addition to what we're managing on a day-to-day front, that we are also thinking about reducing our emissions so that this does not get incrementally or exponentially worse in 3, 5, 10, 20 years, which is what, the technology that we're working on really helps to accelerate so that companies and organizations can reach the goals that they need to.
And that takes me to COP28, which will take place here in the UAE. Many people say to me in the run-up to COP28, it's about the finance, Manus, it's about the finance. Show me the dollars for the emerging markets in terms of delivering change. But for you, what would a successful COP28 be from an IBM, let's say, perspective?
So we're super excited about COP28. We think that there's a lot of really great energy, and we're excited about what our role will be in the partnership that we will have with the COP28 presidency. I think what's really important from our side is how do we make sure that technology is an enabler and accelerator to achieve the change that's necessary faster, right? So I think previous COPs, there was a lot of talk around what we need to do, what the ramifications are if we don't get there, how to make sure that we bring partners together, and these are all very important. Now it's really about the action, right? How do we make sure that we have, to your point, the dollars that are needed to make sure that the investment is going in and that there's money where their mouth is from years past, that the partnership across government, technology, business, social sector, that these are all coming together in order to really enact the change in a faster way than previously. And so I think a successful COP for us is making sure that, technology is part of that answer so that we can get to it faster, and that we're really excited about seeing how these partnerships can come together, and that and how IBM can be a part of that so that we can ensure that we're moving towards our goals collectively.
I mean, look, those are very admirable goals for you, ADNOC. I know that you're working with them and with the COP 2018. Yes. But if I said to you, it's tough times out there. People are cutting back on initiatives. How do you deliver a message of this is CapEx, OpEx that you must make? It is a must-have rather than a nice-to-have, because CFOs have got to make that hard decision. You're propositioning climate change and target and net zero emissions. How do you convince the CFO this is not something to cut back on? This is something to ramp up on.
Yeah, it's a great point. So I would say it across two fronts. One is that this is good for business, right? So CFOs and anybody who's really running a business thinks about what is the bottom line? How do I make sure that I'm engaging my shareholders, my stakeholders? So if you think about it even from a pure business perspective, it is good for business. It is good for the bottom line. You're addressing risk in your business. You're addressing vulnerable supply chains. You're addressing your employees and the communities in which your company is working and your business is operating. And these are all things that any executive, CFO, CEO, COO, all need to be thinking about as part of their business. So that's one. The other piece is that, at the end of the day, what we are all trying to achieve together is a combination of the purpose and profit mentality. And so we as corporate citizens, I would say, we need to kind of embrace the fact that this is part of how we think about our business going forward. And increasingly, globally, there are regulations coming out that are mandating that. So even if you don't want to think about it from a business perspective, which every responsible executive should, you have to comply with regulations in your land. And so one or the other, a combination of both ideally, you're having to address this from the business lens.
That was Christina Shim, Global Head of Product and Strategy at IBM Sustainable Software. Plenty more ahead on Bloomberg.
In global leadership are on Bloomberg.
When the dust settles, Israel will not only remain a democracy, it will be even a stronger democracy, but more importantly, it will not in any way impair the enormous business and economic capabilities of Israel in the new technological age.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority. This week, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Coverage starts Wednesday, August 23rd with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
Let's talk about China, because the country has publicly backed the expansion of the BRICS bloc while also using the annual summit to sound an upbeat note on the nation's economy. While President Xi Jinping skipped the business forum, he did attend a dinner with the leaders of South Africa, Brazil, and India, as well as the Russian foreign minister. Bloomberg's Jennifer Zabazaja joins us now from Johannesburg. So Xi's absence was notable given the deteriorating outlook for China. What more did we hear yesterday?
Yeah, Yusuf, I mean, a lot of people were anticipating this to be the time where President Xi Jinping was going to tout his economy because it was in front of the BRICS Business Council. But it was a little surprising not to see him actually there, especially because earlier in the day, we did see him attend that state visit with South African President Cyril Ramaphosa in Pretoria. So the expectation was that he was going to use this opportunity and this stage to give the message that, you know, his economy is, you know, the message of whatever he believes his economy, the stage his economy is at right now. But instead, we heard from the Commerce Minister, who was defending the economy, saying that the Chinese economy is resilient and saying that there is a long road ahead for them. But as you mentioned, we did eventually see Chinese President Xi Jinping appearing later in the evening at the leaders' gala dinner. But throughout the day, he talked about, you know, earlier in the day in Pretoria, he talked about the importance of the China-South Africa relationship. And so we are waiting to see whether or not he is going to make an appearance today. The leaders are expected to make more speeches throughout the day today and then release a joint statement later this evening. But his absence was very notable, especially considering the Business Council was an opportunity for him to deliver whatever message he wanted to deliver.
So I just wonder what other messages we're going to get. I mean, we've touched on this, haven't we, Jen, about Modi perhaps meeting Xi, etc. What are the other schedule highlights for today?
Yeah, Manis, we're at the moment, what we know is we're just getting a lot of statements right now from the Business Council. We also got a joint statement from the finance ministers of the BRICS countries. So today we're waiting to see whether or not there's going to be some action, because the concern leading into this summit was that we are just going to see a bunch of communiques announcing that everybody is in consensus over certain issues, whether that's economic issues or financial issues. But today we're supposed to get hopefully some substantive notes from the leaders about what it is that they're going to do to move forward. Potentially we hear something about expansion, but at the end of the day, that is the expectation. That is what's on the schedule.
Okay, Jen Zabazaja at the BRICS Summit. Let's see what today yields for us in Johannesburg. We've said since the start of the show it's all about NVIDIA, whether NVIDIA delivers a shocker and a rocker. I mean, the stock's up 221%, but there's no doubt about it. Equity futures are off the lows. How long can the rising interest rate environment, the rising benchmark yields, the highest since what, 2007 and 10 years, do and hold onto this equity market rally? There's the rates narrative, Yusuf. I wonder which number. I mean, you've been away for 10 days. It's a question of where you think we are after you walk back in. Larry Summers talking about a whisper number of 4.75%. Bank of America says prepare for 5%.
Yeah, so I mean, the numbers are coming in from all directions. TD Securities talking about a pain trade at 5%. The financial institutions that are holding a lot of the assets on their balance sheet. If you just track the unrealized held to maturity and available for losses at banks, the pressure is firmly on. Today, it's been also a wider debate around whether China is going to sell U.S. Treasuries to fund its currency intervention. If they do so, is that going to lead to U.S. yields rising even further? U.S. 2-year there at 5.04%.
I like Bill Dudley's op-ed where he says, goodbye to the bull market for treasuries. The paradigm has shifted. Higher yields are back. And he says, look, the strong bond market, the bull market that you had since the 1980s is over. But of course, he did have a pop at Morgan Stanley who said rates would be 2%. He said, you know, I think the title of their thing was Don't Be a Dud. Here's the GMM, Yusuf. I know that commodities is something that has popped for you on that. I'll have a look at the FX, but on the commod side?
Yeah, so we're seeing iron ore just pop up higher somewhat. I'm also looking at news out of Switzerland that the Gotthard Tunnel is open again for freight transport. This is one of the most important infrastructure links in Europe, and it had been offline, and freight had been piling up with transporters seeking alternative routes. So that's going to be very interesting to see that kind of normalization of flow.
Indeed. FX, you might be nervous about Huawei, but it's a blood red sky over London. So what comes out of Jackson Hole can have a pretty tremendous effect on the FX spectrum. We'll leave you with a view of the City of London from Bloomberg. Good morning.
From the world of politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Langs.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue. He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle. It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
From New York City.
In London, in Sydney,
From Washington.
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside? Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda. Asian stocks are mixed after Wall Street's tech-driven rally peters out. Traders watch for results from chipmaker Nvidia and a first reading on Europe's economic performance for August. A Bloomberg scoop, global chip makers warn that Huawei is building a secret network of semiconductor plants to skirt US sanctions and boost China's tech ambitions. Plus, still not doing it. Nike shares drop for a ninth session, their longest ever losing streak, on concerns over sluggish Chinese spending. Well, good morning. Welcome to Wednesday, and you're seeing Treasury yields down in the Asia session. Investors have been positioning for the Fed to keep rates higher for longer, and more clarity on that should come over the next 3 days. The Jackson Hole summit kicks off today. But the broader surge in yields has been the main reason stocks have declined over the past few weeks. And S&P's downgrade of banks yesterday and the Macy's earnings didn't help matters. But this morning you are seeing US futures pointing to a higher opening. Traders awaiting Nvidia's results later after the US bell. At this point, these earnings really are basically a macro indicator on AI. The shares hit an all-time high yesterday and then turned lower. And that slide is a reminder that there's plenty of room for disappointment today. But let's get over to Bloomberg's Asia Markets Executive Editor, Paul Dobson. He's in Singapore, and he's going to tell us how all of this is faring in the Asia session. Paul, you've got Chinese stocks having a late rally yesterday, but back down today. What's going on there?
Yeah, morning, Lizzie. At least on the mainland, equity gauges are back weaker in China today. Yesterday, we had around a couple of hours later than where we are now. So your breakfast time, our mid-afternoon, we had a pretty big rally in Chinese equities, almost from nowhere. And, you know, it really sort of like set the chins wagging, was this kind of tacit support for the market. Our reporters weren't able to speak to anybody who really had any evidence to support that notion. Rather, people pointed to the technicals. And let's face it, Chinese markets have been very oversold already. That said, you know, the mainland gauges are down again today. And what our reporters are pointing to now is these outflows from the blue chip companies, which is, you know, the overseas investors are pulling money out of the biggest names in China. Some of their favored trades earlier on this year, we've seen 12 days of outflows in a row, which is a record streak, and, you know, amounts to several $1 billion as well. So signs of some sort of bigger capitulation or exit en masse by major global investors there. And there's lots to be pessimistic about in those Chinese markets, and this kind of reflects that.
Yeah, the CSI 300 down nearly 0.9% now. Meanwhile, Paul, the yuan pegs come in little changed for a third day. Is this the PBOC drawing a line in the sand?
Everybody's starting to ask that same question as well, Lizzie, over here. You know, fixing it at that rate keeps it within the sort of range on the onshore market of 7.35, which has been identified as a level that authorities are particularly paying attention to. So setting that marker down there would indicate perhaps, you know, the reluctance for authorities to see the yuan go